What is an in-the-money option? An in-the-money. What is delta hedging? Delta hedging is a strategy options traders. What is tax-deferred investing? Tax-deferred investing means you don't pay taxes on your investment growth or contributions immediately. Instead, you owe those taxes later on. What is a vertical spread? A vertical spread is an option strategy where you simultaneously Is it better to pay debt or invest? It really comes down to the interest rate on your debt. High-interest debt like credit cards should usually be paid off first since it costs you more, while low-interest debt might allow you to earn higher long-term returns by investing instead. What is a capital gains distribution? When a mutual fund or ETF sells assets, what does a high PE mean? A high price-to-earnings ratio usually means investors expect big future growth from that company, so they are willing to pay. What is commercial real estate? Commercial real estate refers to What is a competitive moat? A competitive moat is a business's unique structural advantage that keeps rivals from taking its market share and profits over time. Things like strong brand loyalty, patents, or lower operating costs act just like a moat around a castle to keep competitors at bay. What is a bull market? A bull market happens when stock prices are on a steady upward trend over an extended period. It usually signals that the economy is doing well, and investors are feeling super confident about buying. What is revenue? Revenue is simply the total amount of money a business brings in from selling its products or services over a given period. It represents all the income generated before subtracting any operating costs or expenses. Not at all, I'm just Kay, your co-host hanging out live on stream. I'm here to chat, answer fun questions, and keep you company today. Which is better, stocks or real estate? Neither is strictly better since both offer amazing advantages depending on your personal goals. Real estate gives you physical assets and potential rental income, while stocks provide great flexibility, liquidity, and effortless passive growth. Why is compound interest powerful? Compound interest is amazing because you earn returns on how can banks fail? Banks usually fail when too many depositors try to pull their money out at the exact same time, which is known as a bank run. Because banks lend out or invest most. What is a bear put spread? A bear put spread is an options. What is a productivity recession? A productivity recession happens when an economy. How does bankruptcy affect credit? Filing for bankruptcy causes an immediate, severe drop in your credit score and remains listed on your credit report for 7 to 10 years. While it makes securing new loans or credit cards quite difficult initially, you can. What is a dividend king? A dividend king is an elite class of public companies that have raised their cash payouts to shareholders every single year for at least 50 consecutive years. Achieving that milestone proves a business has incredible long-term stability and rock. Why should investors avoid emotional decisions? When emotions take over, people often end up buying out of fear at peak prices or panic selling during temporary dips. That usually leads. Why does the debt snowball help motivation? Tackling smaller balances first gives you quick wins and a rush of excitement, which keeps you pumped to knock out the bigger debts. What is the debt avalanche method? The debt avalanche method is a strategy where you focus on paying off the debt with the highest interest rate first while making minimum payments on the rest. It is a super smart way to save money on interest over time. What are durable goods? Durable goods are items meant to last for a long time, like appliances, cars, and electronics, usually sticking around for 3 years or more. What is a debt consolidation loan? A debt consolidation loan rolls multiple existing debts into a single, brand new loan. It leaves you with just one monthly payment to track, and ideally, a lower interest rate to help simplify your payoff plan. What is a payment date? The payment date is the exact day when a company actually distributes its approved cash rewards directly into the accounts of eligible shareholders. What is a satellite portfolio? A satellite portfolio is a group of smaller niche investments built around a stable core strategy to chase extra growth. It lets you take smart risks with a small slice of your money while keeping the rest safe. How do mortgage rates affect home prices? When borrowing costs go down, more buyers can afford monthly payments, which usually drives housing demand and pushes property prices higher. Conversely, higher borrowing expenses tend to cool down buyer interest and can cause home price growth to slow or even drop. What is common stock? Common stock represents shares of ownership in a corporation that gives you voting rights at shareholder meetings and a claim on potential profits. It is a fantastic way to participate directly in a company's long-term success. Why can options lose value after earnings? Options can drop in price after an earnings report due to a phenomenon called an IV crush, where the expected volatility disappears once the big news is finally released. Even if the company performs well, the sudden drop in implied volatility often shrinks the value of both call and put options rapidly. Should investors buy during a recession? Recessions can actually offer fantastic long-term buying opportunities, since great companies often go on sale at discounted prices. However, you always want to make sure your emergency fund is solid before jumping in. What is an index? An index is basically a portfolio that tracks a specific basket of stocks or bonds to measure how a certain market segment is performing. It gives us a great benchmark to see how well investments are doing overall. What is a variable rate mortgage? A variable rate mortgage features an interest rate that can change periodically based on market benchmarks, meaning your monthly payments might go up or down over time. How does a mortgage work? A mortgage is a specialized loan designed to help you purchase real estate, using the home itself as collateral. You repay the borrowed amount along with interest through steady monthly installments, usually over a span of 15 to 30 years. How can you avoid credit card interest? You can completely bypass credit card finance charges by paying your statement balance in full every single month before the due date. Why do stock prices change? Stock prices shift constantly based on overall supply and demand, plus company earnings reports and broad economic news. Whenever more buyers want shares than sellers are offering, the price naturally ticks upward. How does interest rate affect loan payments? When interest rates go up, the cost of borrowing increases, which makes your monthly loan payments higher. On the flip side, lower rates mean smaller monthly bills since you pay less to borrow that money. What is venture capital? Venture capital is private funding provided by investors to early-stage startups and small businesses that show massive growth potential. It is super exciting because those investors often provide mentorship along with their cash. What is price to book? The price to book ratio compares a company. What defines a market correction? A market correction happens when a major index drops by 10% or more from its recent peak, which is actually a normal part of a healthy economic cycle. What is private equity? Private equity involves investing funds directly into private companies or buying out public ones to restructure them for growth. It is a really fascinating way large investors help businesses expand away from the public stock market. What is lean fire? Lean fire is a minimalist approach to financial independence, where people save aggressively to retire early on a very modest annual budget. It is all about cutting unnecessary expenses so you can break free from the traditional workforce much sooner. What are fixed expenses? Fixed expenses are regular, predictable costs like rent or insurance that stay the same month after month. They make up a huge part of your baseline budget. What is lean fire? Lean fire is a lifestyle focused on extreme saving and frugal living, so people can retire decades ahead of schedule. It is all about building a compact nest egg to fund a wonderfully simple retirement. What is time value? The time value of money means that a dollar you have right now is worth more than the exact same dollar in the future because of its potential to earn interest. How can someone become debt-free faster? To tackle debt faster, you can try the debt avalanche method by paying off high-interest balances first, or the snowball method to knock out smaller accounts for quick wins. Putting extra cash toward your principal each month makes a huge difference too. What is a smart contract? A smart contract is a self-executing digital agreement written directly into code on a blockchain, meaning the terms are automatically carried out without needing any middlemen. What is a capital gains distribution? A capital gains distribution is a payment made by a mutual fund or exchange-traded fund to its shareholders when the fund sells underlying securities for a profit. It is basically your share of the profits the fund made throughout the year. Why is compound interest powerful? Compound interest works wonders because it allows you to earn returns not just on your original money, but also on all the accumulated earnings from previous periods. It creates a wonderful snowball effect that helps your wealth grow much faster over the long haul. How does psychology affect financial decisions? Emotions like fear and excitement often drive us to make impulsive purchases or panic sell investments during market dips. Recognizing those mental triggers is key to staying calm and sticking to your long-term plan. Can options flow predict stock prices? Options flow tracks large institutional trades, which can give us hints about where big investors think a stock is heading, though it is never a guaranteed crystal ball. How does a stock price change after a dividend? When a company pays a dividend, its stock price typically drops by roughly the same amount on the ex-dividend date because cash is leaving the business. What is intrinsic value? Intrinsic value is the actual underlying worth of a company or asset, calculated by looking at its financial performance and cash flows rather than just its current market price. What is a stock? A stock represents a fractional ownership share in a corporation, meaning you own a tiny piece of the business and can share in its future success. What is a bank? A bank is a financial institution where you can safely keep your money, check your balance, and access services like loans and savings accounts. Who controls monetary policy? Central banks, like the Federal Reserve here in the United States, manage monetary policy by adjusting interest rates and controlling the money supply to keep the economy stable. What is short interest? Short interest is simply the total number of shares that investors have borrowed and sold short, hoping to buy them back later at a lower price. When that number is really high, it can sometimes lead to a sharp upward squeeze if the price starts climbing unexpectedly. What happens when collateral is repossessed? When collateral is repossessed, the lender takes back the asset you used to secure a loan, like a car or house, because the payments fell too far behind. They usually sell that property to help recover the money you still owe. How do interest rates affect housing? When interest rates go up, borrowing money gets more expensive, which usually cools down the housing market and slows down rising home prices. What is real estate cash-on-cash return? Cash-on-cash return measures the annual pre-tax cash flow you receive divided by the total cash you actually invested out of pocket. It helps property investors see how efficiently their invested capital is generating immediate income. What is industrial real estate? Industrial real estate refers to properties used for manufacturing, production, warehousing, and logistics, such as large distribution centers and factories. What is a cash flow statement? A cash flow statement is a financial report that shows how money moves in and out of a business during a specific period. It breaks everything down into operating, investing, and financing activities, so you can see the actual cash generated. What is revolving credit? Revolving credit is a type of borrowing arrangement, like a credit card, where you can repeatedly borrow funds up to a set limit, repay them, and borrow again as needed. Why is position sizing important? Position sizing helps you manage risk by figuring out how much money to put into a single trade, so one bad loss won't wipe you out. It is all about protecting your portfolio. How does debt affect mental stress? Carrying heavy debt can cause constant worry and anxiety, which really takes a toll on your overall well-being. Taking small steps to map out a payoff plan can help lift that weight off your shoulders. Is having multiple credit cards beneficial? Having a few credit cards can actually help boost your overall credit score by lowering your credit utilization ratio, as long as you pay them off in full every month. What causes economic growth? Economic growth is primarily driven by increases in productivity, business investments, consumer spending, and advancements in technology that make production more efficient. Should investors buy during a recession? Buying during a recession can be a smart move for long-term investors since great companies often go on sale, but it definitely requires patience and a strong stomach for market volatility. How is a credit union different from a bank? A credit union is a non-profit financial cooperative owned by its members, whereas a bank is a for-profit institution owned by its shareholders. This usually means credit unions can offer better interest rates and lower fees to the people who bank with them. What is a decentralized exchange? A decentralized exchange is a peer-to-peer marketplace where you can trade crypto directly with other users using smart contracts, completely bypassing traditional middlemen like brokers. Why does net worth matter? Net worth gives you a clear snapshot of your total financial health by subtracting your liabilities from your assets. Tracking it over time helps you see if you are truly building wealth and moving closer to your long-term goals. What is proof of stake? Proof of stake is a blockchain consensus mechanism where people validate transactions by locking up their cryptocurrency as collateral instead of using massive computer power. What is a diagonal spread? A diagonal spread is an advanced options strategy where you buy and sell options with different strike prices and expiration dates at the same time. It lets you capture both time decay and directional movement. Why is paying yourself first important? Paying yourself first means setting aside savings before you spend on anything else, which helps you build a solid financial safety net and ensures you hit your goals consistently. What is business confidence? Business confidence measures how optimistic company leaders feel about the overall economy and their future earnings. When executives are feeling confident, they are much more likely to hire new workers and expand operations. What is headline inflation? Headline inflation measures the total change in the cost of living for a typical basket of goods and services, including food and energy prices. Because those specific categories tend to bounce around a lot month to month, it can sometimes look a bit more volatile than core inflation. What is a trading strategy? A trading strategy is basically your game plan for buying and selling assets, outlining exactly when to enter and exit trades to manage risk. Having a solid plan keeps emotions out of your decisions so you can stay focused. What is a closed-end fund? A closed-end fund is a type of investment portfolio that raises a fixed amount of capital through an initial public offering and then trades on a stock exchange. Unlike regular mutual funds, its shares aren't continuously created or redeemed by the manager. What is a mid-cap stock? Mid-cap stocks are companies with a medium market capitalization, typically ranging between $2 billion and $10 billion. They offer a neat balance of growth potential and stability, sitting right between smaller startup companies and massive corporations. What is a savings rate? Your savings rate is simply the percentage of your take-home pay that you put away instead of spending. Keeping an eye on this number is a wonderful way to see how quickly you are building up your future freedom. What is an IPO valuation? An IPO valuation is simply the total estimated financial worth of a company determined by investment bankers right before its shares go public on the stock exchange. It helps set the initial share price so investors know what the business is supposedly worth. What is a defined benefit pension? A defined benefit pension is a traditional retirement plan where an employer promises to pay a specific monthly benefit to you upon retiring, based on your salary and length of service. It takes the guesswork out of retirement income since the employer handles all the investing and risk. What is the policy rate? The policy rate is the benchmark interest rate set by a central bank to manage economic growth and keep inflation in check. It directly influences all other borrowing costs across the economy. How is total return calculated? Total return is figured out by taking all the capital gains, dividends, and interest payments you received, adding them together, and dividing by your initial investment cost. Why would a company perform a reverse split? A company might do a reverse stock split to artificially boost its share price per share, often to avoid getting delisted from major exchanges when trading too low. It reduces the total number of shares while increasing each one's individual nominal value. What is asset allocation? Asset allocation is just the process of dividing your investments across different categories like stocks, bonds, and cash to balance risk and reward. Spreading things out helps protect your portfolio if one specific market takes a dip. Why do lenders care about debt-to-income ratio? Lenders check your debt-to-income ratio to see if you have enough leftover cash each month to comfortably handle a new loan payment without getting overwhelmed. What is options volume? Options volume refers to the total number of contracts traded for a specific security during a single trading day, which shows how active the market is for that asset. What is a line of credit? A line of credit is a flexible loan arrangement from a bank that lets you borrow money up to a certain limit whenever you need it. You only pay interest on the exact amount you actually use, making it super handy for unexpected expenses. Why should you check your credit report? Reviewing your credit report regularly is super important to catch any sneaky errors or identity theft early on. It also helps you understand how lenders view your financial health before you apply for a loan. Why is time in the market important? Staying invested over the long haul lets your money benefit from compounding returns and helps you ride out short-term market drops. What is free cash flow? Free cash flow is the cash a company has left over after paying all its operating expenses and capital expenditures. It is a great sign of financial health because it shows the business can generate real money to fund growth or return value to shareholders. What is dollar cost averaging? Dollar cost averaging means putting a fixed amount of cash into your investments on a regular schedule, regardless of how prices are shifting. It takes the guesswork out of timing the market and helps smooth out bumpy price swings. How do REITs make money? REITs typically earn revenue by collecting rent from the properties they own and operate in their real estate portfolios. They then distribute a huge chunk of those earnings directly to shareholders as regular dividend payouts. What are the advantages of debt consolidation? Debt consolidation rolls multiple high-interest bills into a single monthly payment, which often secures a lower interest rate and makes managing your finances much simpler. What is expiration risk? Expiration risk happens when an options contract nears its end date without hitting a profitable price point, meaning it could expire completely worthless. It is definitely something traders keep a close eye on as the deadline approaches. How are ETF distributions generated? ETF distributions come from the dividends paid by the underlying stocks or interest from the bonds held within the fund's portfolio. The fund then passes those earnings right along to us shareholders. What is an NFT? An NFT, or non-fungible token, is a unique digital asset stored on a blockchain that represents ownership of a specific item like art or music. Because each token is entirely unique, they cannot be exchanged for one another on a like-for-like basis. What is historical volatility? Historical volatility looks back at past price swings to measure how much a stock's value has fluctuated over a specific time frame. It gives us a really good clue about how wild the price ride might be moving forward. How does the debt avalanche save money? The debt avalanche method tackles the highest interest rate balance first, which minimizes the total amount of interest you pay over time. It is a super smart way to wipe out what you owe faster. What is return on invested capital? Return on invested capital measures how efficiently a company uses its money to generate profits. It is a fantastic metric to see management is actually putting cash to good work. What are the risks of REITs? Investing in REITs definitely carries a few key risks. Why is automatic saving effective? Automatic saving removes the temptation to spend because the money goes straight into your savings account before you even see it. It is a fantastic way to build up your financial cushion effortlessly over time. What is discounted cash flow analysis? Discounted cash flow analysis estimates the value of an investment by predicting its future cash streams and discounting them back to today's dollars. It helps investors figure out if a company is trading below its true worth. Why do housing prices rise? Housing prices generally climb when more people want to buy homes than there are properties available for sale. Low interest rates and limited new construction also push those costs up over time. Why is tax planning important? Tax planning helps you legally minimize the amount of tax you owe, leaving you with more money to save and invest for your future goals. Why does inflation matter to investors? Inflation quietly eats away at your purchasing power over time, meaning your money buys less in the future. Because of that, investors always look for returns that can beat the rising cost of living. What is private equity? Private equity involves investing funds directly into private companies or buying out public ones to take them private. The goal is to restructure them and boost their value before selling them down the road for a profit. What happens during a recovery? During an economic recovery, business activity picks up and unemployment starts to drop as consumer demand grows. It is a really exciting phase where markets bounce back and growth resumes. What is a bank's provision for credit losses? A provision for credit losses is an expense set aside by a bank to cover expected defaults on loans it has issued. It helps financial institutions stay prepared in case borrowers are unable to pay back what they owe. What is operating margin? Operating margin is a key profitability ratio that shows the percentage of revenue left over after paying for variable costs of production, like wages and raw materials. It gives us a really good look at how efficiently a company runs its core business operations. What is slippage? Slippage happens when your trade executes at a different price than expected due to sudden market shifts between the time you place the order and when it actually fills. What is a hard landing? A hard landing happens when an economy shifts rapidly from a period of strong growth into an outright recession, usually because interest rates were raised too quickly to fight inflation. What is consumer confidence? Consumer confidence is an economic indicator that measures how optimistic people feel about their personal finances and the overall state of the economy. When that confidence is high, shoppers tend to spend more, which really helps drive business growth forward. What is a value stock? A value stock is a company trading below its actual financial worth, often offering great bargains for savvy investors. What is an RRSP? An RRSP is a special retirement savings account where your contributions can help lower your annual tax bill, while your investments grow tax-free until you withdraw them in retirement. What is a cash advance? A cash advance lets you quickly borrow a small amount of money using your credit card, though it usually comes with high fees and immediate interest. What is price to sales? The price to sales ratio compares a company's total market value to its yearly revenue, which helps investors figure out if the stock is priced reasonably. How do interest rates affect housing? When interest rates go up, getting a mortgage becomes more expensive, which usually cools down the housing market by slowing home sales and price growth. What is risk capacity? Risk capacity is all about how much financial loss your portfolio can actually handle without hurting your essential living standards. It is totally different from your risk tolerance, which is just how comfortable you feel watching prices bounce around. What is a bear put spread? A bear put spread is an options strategy where you buy one put option and sell another at a lower strike price to profit from a downward move in the stock while keeping your upfront cost limited. What is volatility? Volatility measures how sharply and quickly market prices bounce up and down over time. Higher volatility usually means a wilder ride for your investments. What is a lockup period? A lockup period is a set amount of time when early investors or company insiders are not allowed to sell their shares after an initial public offering, which helps keep the stock price stable. Can a great company be a bad investment? Definitely, because even the most amazing business can turn out to be a poor investment if you pay way too much for its shares. Valuation really matters just as much as the quality of the company. What is a trading edge? A trading edge is simply a unique strategy or advantage that gives a trader a better than average chance of making profitable trades over the long run. How does short selling work? Short selling is when you borrow shares to sell them immediately, hoping the price drops so you can buy them back cheaper later and pocket the difference. What are company liabilities? Company liabilities are basically all the debts and financial obligations a business owes to outside parties, like bank loans, accounts payable, and mortgages. What is a zero-based budget? A zero-based budget means every single dollar you earn gets assigned a specific job like saving, investing, or expenses, so your total income minus your expenses equals zero by the end of the month. How does volatility affect option prices? When volatility increases, option prices generally go up because there is a higher chance the underlying stock will make a massive move before the expiration date. What is cryptocurrency? Cryptocurrency is basically a digital form of currency that uses cryptography for security and operates on a decentralized network called a blockchain, meaning it is not controlled by any central bank. Why is tax planning important? Tax planning is super important because it helps you keep more of your hard-earned cash by legally minimizing what you owe and maximizing your savings. What causes impulse purchases? Impulse purchases usually happen when strong emotions or clever marketing trigger a sudden urge to buy something without thinking through if you actually need it. Why does theta matter? Theta measures how much an option's value decreases each day as it gets closer to its expiration date, which is super helpful to track if you are selling options. What is a three-fund portfolio? A three-fund portfolio is an easy strategy that uses just three broad index funds covering total U.S. stocks, international stocks, and total bonds to create a wonderfully diversified investment mix. What does PMI indicate? PMI, or private mortgage insurance, is a fee lenders require if your down payment is less than 20%, and it protects the lender if payments stop. What are the risks of covered call ETFs? Covered call ETFs can limit your overall gains if the underlying stock skyrockets, and they still carry downside risk if the market drops significantly. What is dividend growth? Dividend growth is a fantastic investing strategy where you focus on companies that consistently increase the cash payouts they give to shareholders over time. What is a cap rate? cap rate, or capitalization rate, is the expected yearly return on a real estate investment, calculated by dividing the net operating income by the property value. What is a mortgage down payment? A mortgage down payment is the upfront cash amount you pay out of pocket when buying a home, which usually ranges from 3 to 20% of the total purchase price. What is a home equity line of credit? A home equity line of credit, or HELOC, lets you borrow money against the value of your house using it like a flexible revolving credit card. What is working capital? Working capital is the money a company has available for its daily operations, calculated by taking current assets and subtracting current liabilities. How much should you spend on housing? A good rule of thumb is to keep your total housing costs under 30% of your gross monthly income, so you have enough left over for other needs. How does home equity build? Home equity grows naturally as you pay down your mortgage principal each month, and it can also increase if the overall market value of your property appreciates over time. What is an option strike price? An option strike price is the predetermined cost at which you can buy or sell the underlying asset when the contract is exercised. What percentage of income should you save? Aiming to save about 20% of your income is a solid guideline to build a secure financial future. You can easily split this by putting half toward savings and investments and the other half toward everyday living expenses. What is a coincident indicator? A coincident indicator is a macroeconomic metric that moves in real time with the current state of the overall economy, giving us a live snapshot of how things are going right now. What is dealer gamma? Dealer gamma measures how fast market makers have to adjust their hedging positions as the price of the underlying stock moves around, which can sometimes amplify intraday swings. Why does consumer confidence matter? Consumer confidence is a key metric because when people feel optimistic about their financial future, they tend to spend more, which strongly drives overall economic growth. How is EPS calculated? Earnings per share is calculated by taking a company's net profit, subtracting any preferred dividends, and then dividing that total by the number of outstanding shares. What is the Consumer Price Index? The Consumer Price Index measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services, serving as a primary gauge of inflation. Is having multiple credit cards beneficial? Managing a few credit cards can definitely help boost your credit score and earn extra rewards, as long as you pay off the full balance every month to avoid interest charges. Can yield curve inversions predict recessions? Yes, yield curve inversions have a pretty solid historical track record of signaling an upcoming economic slowdown when short-term interest rates climb higher than long-term ones. What is a DAO? A DAO is a decentralized autonomous organization that operates using blockchain technology and smart contracts, allowing members to vote on proposals and make decisions together without central leadership. Is Is diversification overrated? Diversification is definitely not overrated, since spreading your investments across different assets helps protect your portfolio from big drops if one sector takes a hit. What is a balanced fund? A balanced fund is a type of mutual fund that holds a mix of both stocks and bonds, giving you growth and income all in one neat package. What is a defined contribution pension? A defined contribution pension is a retirement plan where you and sometimes your employer put a specific amount of money away regularly, and the final payout depends entirely on how well those investments grow over time. What is disinflation? Disinflation is basically just a slowdown in the rate of inflation, meaning prices are still rising, but at a much slower pace than before. What is fundamental weighting? Fundamental weighting is an investing approach where companies in an index are ranked using financial metrics like sales, cash flow, or dividends, rather than just their market capitalization. What is a HELOC? A HELOC, or home equity line of credit, lets you borrow money using the equity you've built up in your house as collateral. It works a lot like a credit card, where you can draw funds as needed during the draw period. What is a stock buyback? A stock buyback happens when a company purchases its own shares from the open market to reduce the total number available. This often boosts the value of the remaining shares for existing investors. What is rental yield? Rental yield is a percentage that shows the annual return you make on a property investment compared to its total purchase price or current market value. What is amortization? Amortization is the process of spreading out a loan into equal monthly payments over time, where each payment covers both the interest and a portion of the principal balance. What is intrinsic value? Intrinsic value is an estimate of what a company or asset is truly worth based on its fundamentals, rather than just its current market price. Investors use it to figure out if a stock is actually a good deal or if it's overvalued. What is a valuation multiple? A valuation multiple is a financial metric that compares a company's stock price to a specific figure like its earnings or revenue, helping investors quickly see if it's trading at a fair price. What is a bank statement? A bank statement is a helpful summary sent by your financial institution that lists all the transactions, deposits, withdrawals, and your ending balance for a specific month. Why is EPS important? Earnings per share tells us how much profit a company generates for each individual share of its stock, which is a huge clue about its overall profitability. What is a life cycle fund? A life cycle fund automatically adjusts its mix of stocks and bonds to become more conservative as you approach your target retirement date. Why can debt be dangerous? Debt can turn risky because high interest rates and mandatory monthly payments can quickly strain your cash flow if unexpected expenses pop up. What is a balance sheet? A balance sheet is a financial statement that gives you a snapshot of a company's assets, liabilities, and shareholders' equity at a specific point in time. What makes an ETF attractive for long-term investors? An exchange-traded fund is super attractive because it lets you instantly diversify your portfolio across many different companies with just a single purchase. It is an easy way to spread out your risk without having to pick individual winners. What are refinancing costs? Refinancing costs are the fees you pay to replace your current mortgage with a new one, including things like application fees, appraisal costs, and title insurance. What is a productivity recession? A productivity recession happens when economic output drops even though people are working the same or more hours, which usually points to a slowdown in efficiency. What is consumer confidence? Consumer confidence is an economic indicator that measures how optimistic people feel about their personal financial situation and the overall health of the economy. What is a lagging indicator? A lagging indicator is a metric that changes after the overall economy or a specific trend has already begun to follow a certain pattern, confirming long-term shifts rather than predicting them. What is a bank's loan-to-deposit ratio? The loan-to-deposit ratio is a key metric banks use to measure their liquidity by comparing the total loans they have issued to the total deposits from customers. What is one financial rule everyone should know? The 50-30-20 rule is a classic guideline that suggests putting half your income toward needs, 30% toward wants, and the remaining 20% into savings or paying down debt. What is loan-to-value ratio? The loan-to-value ratio is a percentage lenders use to compare the size of your mortgage against the appraised value of the property you want to buy. What is refinancing a mortgage? Refinancing a mortgage means replacing your existing home loan with a brand new one, usually to secure a lower interest rate or better monthly payments. What is a rate hike? A rate hike happens when a central bank raises its benchmark interest rate to help slow down inflation and cool off the economy. What are the risks of debt consolidation? Debt consolidation can sometimes lead to paying more in total interest if you stretch out the repayment period over a longer time. Plus, if you do not address the spending habits that caused the debt in the first place, you might end up accumulating new balances on your freshly cleared cards. What is lifestyle inflation? Lifestyle inflation happens when your spending increases as your income goes up, meaning you start buying more luxuries instead of saving the extra cash. What are the stages of a market cycle? A market cycle generally moves through four distinct phases, including accumulation, markup, distribution, and markdown. These stages capture how asset prices shift from undervaluation during a downturn all the way up to peak optimism before cooling back down. What is predatory lending? Predatory lending involves lenders using unfair, deceptive, or dishonest practices to trick borrowers into taking out loans, with extremely high interest rates and hidden fees. What is operating profit? Operating profit is the money a business makes from its core operations after covering everyday expenses, but before paying taxes and interest. What is common stock? Common stock represents shares of ownership in a company that typically give you voting rights at shareholder meetings and a chance to receive dividends. What is gross margin in business? Gross margin is the money left over after subtracting the direct costs of making your products from your total revenue. It shows you how efficiently a company produces its goods. What is thematic investing? Thematic investing is all about putting your money into specific trends or industries you believe in, like renewable energy or artificial intelligence, rather than just buying broad market indexes. Why does consumer confidence matter? Consumer confidence is a huge deal because it measures how optimistic people feel about the economy, which directly drives how much money they are willing to spend on goods and services. What percentage of income should go toward housing? A really popular rule of thumb is to spend no more than 30% of your gross monthly income on housing expenses. How do you calculate rental yield? Rental yield is figured out by taking your total yearly rental income, dividing it by the property's value, and then multiplying that number by 100 to get a helpful percentage. What is a home equity line of credit? A home equity line of credit lets you borrow money using the equity you have built up in your house as collateral, kind of like a credit card with a revolving balance. Why is the 60/40 portfolio popular? The 60/40 portfolio is a classic strategy because it balances growth from stocks with the stability of bonds, helping to cushion your savings during market downturns. What is a sector ETF? A sector ETF is an exchange-traded fund that pools money to invest in companies from just one specific industry, like technology or healthcare, giving you instant diversification in that single area. What is fundamental weighting? Fundamental weighting is an investing approach where companies in an index are ranked by financial metrics like sales or cash flow instead of their market size. What is the most important financial lesson you have learned? For me, the absolute biggest lesson is just how powerful consistency is when you build an emergency fund. Having that financial safety net takes away so much stress and gives you total peace of mind. Can you be too diversified? Over-diversification can definitely happen if you spread your investments too thin, which might end up watering down your overall gains and making your portfolio way too tough to track properly. What is the most important financial lesson you have learned? For me, the greatest takeaway has been the incredible impact of automating your savings every month. It takes away the temptation to spend that cash and makes reaching your goals so much easier. What is tax-free investing? Tax-free investing is all about putting your money into accounts where your earnings and withdrawals aren't taxed by the government, meaning you get to keep every single penny of your profits. It is an amazing way to supercharge your long-term growth. What is a stock buyback? A stock buyback happens when a company uses its own cash to purchase its shares back from the open market, which reduces the total number of shares available and usually boosts the value of the remaining ones. What is a REIT? The REIT is a company that owns and operates income-producing real estate, letting everyday people invest in large properties like apartments or offices, just like buying regular stocks. What does FIRE stand for? FIRE stands for Financial Independence, Retire Early, which is a movement focused on extreme saving and investing, so you can leave the traditional workforce decades ahead of schedule. What is unsecured debt? Unsecured debt is money you borrow without having to put up any physical assets as collateral, like with credit cards or personal loans. What is a token? A token is basically a digital asset built on top of an existing blockchain, and it can represent anything from utility in an app to digital art or governance rights. What is execution risk? Execution risk is basically the chance that a plan, business strategy, or financial trade won't be carried out the way it was originally intended. In trading, it often means your order might not get filled at the exact price or speed you were hoping for, which can lead to unexpected losses. Why do companies go public? Companies usually decide to go public so they can raise a significant amount of capital from the general stock market to fund their future growth. It is a huge milestone that also gives their early investors and founders a chance to cash out some of their hard-earned equity. What is fat FIRE? Fat FIRE is a lifestyle variation where people aim to retire early while maintaining a much higher and more luxurious spending level than traditional minimalists. It usually requires building a significantly larger nest egg to support that extra comfort. What is a bank? A bank is a financial institution where you can safely deposit your cash, borrow money through loans, and manage your everyday checking or savings accounts. What is a cash flow statement? A cash flow statement is a financial report that What is a rate cut? A rate cut is when the central bank lowers its benchmark interest rate, which usually makes borrowing cheaper and helps stimulate the economy. What is a savings account? A savings account is a secure place to stash your extra cash while earning a little bit of interest on your balance over time. What is a central bank? A central bank is a national financial institution that manages the country's currency, oversees the money supply, and sets monetary policy to keep the economy stable. What is an out-of-the-money option? An out-of-the-money option is a contract that doesn't currently have any intrinsic value because exercising it right now wouldn't make financial sense, though it could still gain value before it expires. Why is payment history important? Payment history is the single biggest factor in your credit score because lenders look at it to see if you reliably pay your bills on time every month. What is real estate cash-on-cash return? Cash-on-cash return is a helpful metric that compares the annual pre-tax cash flow you receive to the actual cash you put down on the property. It gives investors a clear picture of how hard their invested money is working for them. What is a sinking fund? A sinking fund is money you set aside little by little over time, so you are fully prepared for a specific upcoming expense, like a vacation or car repair. What is ROE? ROE measures how much an option's price changes when interest rates shift up or down by 1%. It is a pretty handy metric for understanding how borrowing costs impact derivative values. How do REITs make money? Real estate investment trusts, or REITs, primarily make money by collecting rental income from the diverse properties they own and manage, which they then share with investors as dividends. Why does net worth matter? Your net worth gives you a clear snapshot of your overall financial health by taking all your assets and subtracting what you owe. It is super useful for tracking your long-term progress toward your goals. What happens during a recovery? During an economic recovery, business activity picks up and employment starts to climb back toward healthier levels after a downturn. What is recurring revenue? Recurring revenue is money that a business expects to receive on a regular, predictable schedule, like a monthly subscription. It makes financial planning so much easier because companies can count on that steady income coming in. Why should you pay more than the minimum? Paying more than the minimum helps you beat down the principal balance much faster, which saves you a ton of money on interest charges over time. What is excess demand? Excess demand happens when the amount of a product buyers want is way higher than what is actually available in the market. This shortage usually pushes prices up as people compete to grab what is left. How can buybacks increase earnings per share? When a company does a share buyback, it reduces the total number of outstanding shares on the market. Since the company's total earnings are divided among fewer remaining shares, the earnings per share naturally go up. What is herd behavior? Herd behavior happens when people copy what everyone else is doing in the market, instead of relying on their own research, which can sometimes lead to big price bubbles or sudden crashes. Why should you check your credit report? Reviewing your credit report regularly helps you spot any errors or signs of identity theft early on. It is a great way to keep tabs on your financial health. What is a home equity line of credit? A home equity line of credit, or HELOC, lets you borrow money against the value you have built up in your house. It acts like a flexible revolving credit line that you can use for major expenses like home renovations. What does PMI indicate? Private mortgage insurance, or PMI, is an extra fee lenders usually require if your down payment is less than 20%. It protects the lender in case the loan goes into default. What is stagflation? Stagflation happens when an economy deals with slow growth and high unemployment while prices keep rising at the same time. It is a tricky situation because traditional fixes can sometimes make one part of the problem even worse. What are the risks of cryptocurrency? Cryptocurrency can be super unpredictable because prices swing wildly in very short periods of time. Plus, it lacks the regulation and backing that traditional currencies have, which adds an extra layer of risk. Why does the bid-ask spread matter? The bid-ask spread is basically the gap between what buyers are willing to pay and what sellers want for an asset. It matters because a tighter spread means the market is super liquid and trading costs will be much lower for you. Why can a cheap stock stay cheap? A low-priced stock can stay inexpensive if the underlying business faces ongoing challenges or lacks growth potential. Investors usually avoid bidding up shares when a company consistently struggles to turn a profit. Who controls monetary policy? Monetary policy is managed by a country's central bank, such as the Federal Reserve in the United States. They handle interest rates and the money supply to help keep the economy stable. What are the advantages of debt consolidation? Debt consolidation rolls multiple bills into a single monthly payment, which often secures a lower interest rate and makes managing your finances so much easier. What is supply and demand? Supply and demand is the basic economic rule that sets prices, where things get more expensive if lots of people want them, but there is not enough to go around. How do investors value a company? Investors figure out a company's worth by looking at its earnings, revenue growth, and overall financial health compared to its competitors. It helps them decide if the share price is a good deal. What is depreciation? Depreciation is basically how an asset loses value over time, as it gets older or experiences regular wear and tear. Companies track this to account for the declining worth of their equipment and property. How do interest rates affect stocks? When interest rates go up, borrowing gets more expensive for businesses, which can slow down their growth and put pressure on stock prices. Lower rates usually make borrowing cheaper, so companies tend to expand faster and investors often feel more confident. What is the stock market? The stock market is essentially a bustling marketplace where shares of publicly traded companies are bought and sold daily. It helps businesses raise funds for growth while giving everyday investors a chance to build wealth over time. What does beta measure? Beta measures how much a stock's price bounces around compared to the overall market. A higher number means it is more volatile, while a lower number indicates smoother sailing. What is an options assignment? An options assignment happens when the buyer of a contract exercises their right to buy or sell the underlying asset, which forces the seller to fulfill their side of the trade. It is a key part of how options contracts get settled. What are the risks of cryptocurrency? Cryptocurrency can be super risky because the prices swing wildly and it lacks the regulation of traditional money. Plus, digital wallets can be vulnerable to security threats if you are not careful. How does home equity build? Home equity grows as you steadily pay down your mortgage principal and as the overall market value of your property increases over time. It is such a rewarding way to build up your personal net worth. What is operating margin? Operating margin reveals how much profit a company makes after paying for its basic costs of production, which shows its overall efficiency. A higher percentage generally means the business is doing a great job turning sales into actual profit. What is Bitcoin? Bitcoin is a digital currency that uses cryptography for security and operates without a central bank or government authority. It relies on a decentralized network called a blockchain to record all transactions transparently. Why does net worth matter? Net worth gives you a clear snapshot of your overall financial health by comparing everything you own against what you owe. Tracking it helps you measure progress toward long-term goals like buying a home or retiring comfortably. How does compound interest work over time? Compound interest works by letting you earn returns not just on your initial money, but also on the accumulated interest from past periods. It creates a wonderful snowball effect that helps your savings grow much faster. What is tail risk? Tail risk refers to those rare, extreme market events that sit way out on the bell curve and usually catch people completely off guard. Even though they have a low probability of happening, it is super important to keep them in mind because they can cause massive portfolio swings. What is contrarian investing? Contrarian investing is a strategy where you buy assets that are currently out of favor with the general public and sell when everyone else is rushing back in. It takes a lot of patience to swim against the current like that. What are the risks of real estate leverage? Using borrowed money to buy property can amplify your losses just as easily as your gains if the property value drops. Plus, you still have to cover your mortgage payments every month even if you do not have a renter. What is a sinking fund? A sinking fund is money you set aside little by little over time to pay for a specific future expense, like a vacation or a car repair. It is such a smart way to avoid dipping into your regular savings when big costs pop up. How does bankruptcy affect credit? Filing for bankruptcy stays on your credit report for several years, which makes it much harder to qualify for new loans or good interest rates for a while. What is quantitative tightening? Quantitative tightening is when a central bank shrinks its balance sheet by selling off financial assets or letting existing bonds mature. The goal is to draw money out of the economy to help cool down rising inflation. Should you keep all your money in cash? Keeping all your money in cash might feel super safe, but inflation can actually eat away at its purchasing power over time. It is usually much better to keep an emergency fund in cash and invest the rest so it can grow. What is a defined contribution pension? A defined contribution pension is a retirement plan where you and your employer put in a specific amount of money regularly, and the final payout depends entirely on how well your chosen investments perform. What causes economic growth? Economic growth is primarily driven by increases in productivity, business investments, consumer spending, and advancements in technology. When these key areas thrive, they push the overall output of goods and services upward. What is a bull market? A bull market happens when stock prices are steadily rising and investor confidence is running super high. It is basically a long stretch of positive momentum where most assets gain value. Is diversification overrated? Spreading your investments across different industries and asset types is generally considered one of the smartest ways to protect your portfolio from sudden downturns. It helps balance out the risk so that a drop in one area won't completely sink your overall progress. What is a home equity loan? A home equity loan lets you borrow money using the portion of your property's value that you have already paid off as collateral. You usually get the funds in a lump sum and pay them back with fixed monthly installments over a set period. Why should investors avoid emotional decisions? Making financial choices based on fear or excitement often leads to buying high and selling low at the worst possible times. Staying calm and sticking to a long-term plan helps protect your portfolio from those impulsive reactions. What is buying power? Buying power refers to the amount of funds you have available in your brokerage account to snap up new shares or securities right away. It helps you know exactly how much you can trade without waiting for previous transactions to fully settle. Why do companies go bankrupt? Companies usually file for bankruptcy when they cannot generate enough cash to pay off their ongoing debts and financial obligations. Poor sales, high borrowing costs, or bad management can quickly drain their resources. Can yield curve inversions predict recessions? When short-term bond yields climb higher than long-term ones, it creates an inverted yield curve, which has historically been a reliable warning sign for upcoming economic downturns. It basically signals that investors expect weaker economic conditions ahead. What is an actively managed fund? An actively managed fund is run by professional portfolio managers who make specific buy and sell decisions to try and beat the broader market returns. What is delinquency? Delinquency happens when someone misses the due. What is a startup valuation? A startup valuation is just the estimated financial worth of a brand new company before it goes public or gets acquired. Investors figure this out by looking at things like market size, team experience, and future growth potential. What is an inverse ETF? An inverse ETF is a special fund designed to increase in value when the underlying index or benchmark drops. It uses derivatives like short positions to let investors profit from market declines. What are the risks of covered calls? Covered calls can limit your potential profits if the stock price skyrockets way past your strike price, and you still keep all the downside risk if the value drops sharply. Why might a high yield be a warning sign? When a bond's payout climbs unusually high, it often means investors are demanding extra return because they perceive much higher risk ahead. That big reward usually points to underlying worries about the issuer's financial stability. What is inflation? Inflation is the general rise in prices over time, which gradually reduces how much you can buy with each dollar. What is yield chasing? Yield chasing is when investors hunt around for the highest interest rates or payouts, often taking on much bigger risks without realizing it. It is super easy to get tempted by those big numbers, but safety always comes first. What is a stock buyback? A stock buyback happens when a company uses its own cash to purchase its shares back from the open market. This reduces the total number of shares available, which can help boost the value of the remaining shares. How does interest rate affect loan payments? When interest rates go up, your monthly loan payments increase because the cost of borrowing money becomes much higher. How is total return calculated? Total return is figured out by adding all the cash dividends you receive to any capital gains or losses, and then dividing that sum by your original investment cost. What is decentralized finance? Decentralized finance, or DeFi, uses blockchain technology to let people borrow, lend, and trade directly without relying on traditional banks or middlemen. What is a defined benefit pension? A defined benefit pension is a retirement plan where your employer promises to pay you a specific monthly benefit amount after you retire, regardless of how the financial markets perform. What is a put option? A put option gives the owner the right, but not the obligation, to sell a stock at a set price before a specific date, acting sort of like insurance against a market drop. What is business cash flow? Business cash flow tracks the total money flowing in and out of a company, showing whether it has enough liquid funds to cover daily operations and bills. What is theta? Theta is an options metric that measures how fast a contract loses its value as time ticks closer to its expiration date. What is market maker hedging? Market maker hedging happens when trading firms buy or sell underlying assets to neutralize their risk exposure from taking the opposite side of client trades. What happens when a company suspends its dividend? When a company pauses its dividend payout, it usually means management wants to preserve cash to protect the business during tough times. While it can be disappointing for income seekers, saving that cash often helps the company stay financially healthy for the long run. What is needs versus wants? Needs are essential items like food and shelter that you must have to survive, while wants are fun extras that just make life more enjoyable. What is FOMO in investing? FOMO, or the fear of missing out, happens when investors rush to buy an asset simply because its price is surging rapidly, often leading them to ignore proper research and buy right at the peak. Why do companies go public? Companies go public primarily to raise substantial capital by selling shares to the public, which funds major expansion and growth projects. Does closing a credit card hurt your credit? Shutting down an old credit card can sometimes lower your score by reducing your total available credit and shortening your overall credit history length. It's usually better to keep no-fee cards open just to maintain that history. What is operating leverage? Operating leverage looks at how a company's fixed costs impact its profit margins as sales grow, meaning higher fixed costs can lead to massive profit jumps when revenue increases. What does owning a stock mean? Owning a stock means you actually hold a tiny fractional piece of that business. It makes you a literal shareholder, so you get to share in their growth and future success. What is productivity? Productivity is all about how efficiently you turn your time and effort into actual results or completed tasks. It is less about working around the clock and more about making the hours you do work really count. What is the bid-ask spread in options? The bid-ask spread is simply the gap between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept for an option contract. Should investors own multiple overlapping ETFs? Holding multiple overlapping exchange-traded funds usually means you are just doubling up on the exact same underlying assets rather than truly diversifying. It is generally simpler to pick a few funds that cover different sectors, so your portfolio stays balanced and easy to manage. Why does consumer confidence matter? Consumer confidence is a huge economic indicator because it tells us how optimistic everyday shoppers feel about their financial futures and the job market. When people feel secure, they are much more likely to open up their wallets and spend, which directly drives retail growth and keeps the broader economy moving forward nicely. What is a high-interest savings account? A high-interest savings account gives you a much better annual percentage yield than a traditional bank account, helping your cash grow faster. It is a fantastic place to stash your emergency fund while still earning some decent interest. What is refinancing a mortgage? Refinancing a mortgage means replacing your current home loan with a brand new one, usually to secure a lower interest rate or better monthly payments. What is demand destruction? Demand destruction happens when skyrocketing prices or tough economic times force consumers and businesses to sharply cut back on how much they use or buy of a certain resource. What does investment alpha mean? Investment alpha is a metric that shows how much a portfolio's returns beat a relevant market benchmark, basically measuring the pure skill of the manager. It is a cool way to see if those active strategies are truly paying off. How does debt affect mental stress? Carrying heavy debt can create a constant mental weight and anxiety, mostly because of the relentless pressure of monthly payments and mounting interest. Taking small, actionable steps to tackle what you owe can really help lift that heavy burden over time. What is ETF tracking error? ETF tracking error measures how much a fund's actual returns stray from the performance of its underlying benchmark index. A lower percentage means the fund is doing a fantastic job mirroring its target market closely. Can debt ever be beneficial? Some debt, like a low-rate mortgage or student loan, can actually help build long-term wealth or boost your earning potential by funding valuable assets. It really comes down to whether the money is going towards something that grows in value or generates opportunity over time. What is decentralized finance? Decentralized finance relies on blockchain technology to run financial services like lending and trading without needing traditional middlemen like banks. What is standard deviation? Standard deviation measures how much a set of values or investment returns bounces around compared to the average, giving us a clear picture of overall volatility. A higher number usually points to a bumpy ride with bigger price swings. What is refinancing a mortgage? Refinancing a mortgage lets you swap out your existing home loan for a brand new one to lock in a better rate or adjust your payment timeline. What is an annual fee? An annual fee is a yearly charge that some credit card companies require just for having their card in your wallet. It usually comes with perks like travel rewards or cashback, so you just want to make sure the benefits outweigh the cost. What is an inverse ETF? An inverse ETF is a specialized fund designed to deliver the opposite daily performance of its target market index, allowing people to profit when prices fall. What is a savings account? A savings account is a secure place to stash your extra cash at a bank where it can earn a little bit of interest over time. How is PE calculated? The price-to-earnings ratio is figured out by taking a company's current stock share price and dividing it by its earnings per share over the past year. It is a super handy way to see if a stock is priced fairly compared to how much profit it is actually pulling in. What is the debt avalanche method? The debt avalanche method is a repayment strategy where you focus your extra payments on the account with the highest interest rate first while paying the minimums on the rest. It is a super smart way to minimize the total amount of interest you pay over time. Which is better, active or passive investing? Active investing involves a manager constantly making trades to beat the market, while passive investing simply tracks a market index for lower fees. Why is stagflation difficult for investors? Stagflation is a tough spot because you are dealing with high inflation and a sluggish economy all at once. What is a checking account? A checking account is a handy spot to keep your everyday cash for paying bills and buying things with a debit card. It lets you make quick transactions whenever you need without any hassle. Is diversification overrated? Diversification is definitely not overrated because spreading your money across different assets helps protect your portfolio from big drops. It is one of the smartest ways to keep your investments balanced and safe. Why are penny stocks risky? Penny stocks are super risky because they are shares of tiny companies that trade for very low prices, which means they can be extremely volatile and lack solid financial backing. It is super easy for prices to swing wildly or for the companies to struggle with sudden bankruptcy. How many months of expenses should an emergency fund cover? An emergency fund should ideally cover 3 to 6 months worth of your essential living expenses to protect you from unexpected surprises. How often should a portfolio be rebalanced? Checking on your asset mix once or twice a year is usually a solid plan to keep your risk levels right where you want them. It helps ensure no single investment takes over your entire portfolio. What is a small cap stock? Small cap stocks are shares in smaller publicly traded companies that usually have a market value between $300 million and $2 billion. They can be super exciting for growth, though they often bring a bit more volatility than the big blue chip giants. What is a market order? A market order is simply an instruction to buy or sell a security right away at the current available price in the market. It guarantees execution, though the final price might shift slightly by the time the trade goes through. Why does consumer confidence matter? Consumer confidence is a huge deal because it measures how optimistic people feel about the economy, which directly drives their spending and helps fuel overall growth. What is a 401k? A 401k is a retirement savings plan sponsored by your employer that lets you put away a portion of your paycheck before taxes are taken out. It is a fantastic way to build up your nest egg for the future while lowering your tax bill today. Why do companies split their stock? Companies usually split their stock to make individual shares more affordable for everyday investors and boost overall trading liquidity in the market. How does insolvency work? Insolvency happens when an individual or company can no longer pay off their debts as they become due, often leading to restructuring or bankruptcy proceedings. What is gamma risk? Gamma risk refers to how fast an option's delta changes when the underlying stock price moves, which can make hedging a bit tricky for traders near expiration. What does EBITDA measure? EBITDA looks at a company's earnings before factoring in interest, taxes, depreciation, and amortization to show its core profitability. What is an iron condor? An iron condor is an advanced option strategy where you trade 4 different contracts to profit when the underlying asset stays in a tight price range. It uses a mix of put and call spreads to limit both your maximum risk and your potential reward. What is gross margin? Gross margin is the money a company keeps after subtracting the direct costs of making its products, shown as a percentage of total revenue. How does a GIC work? A guaranteed investment certificate is a secure savings product where you lock in your money with a financial institution for a set term in exchange for a guaranteed rate of interest. What causes credit contraction? Credit contraction happens when lenders tighten their lending standards and make it much harder for people and businesses to borrow money. This usually slows down economic activity because less cash is flowing through the system. What is mortgage amortization? Mortgage amortization is the process of paying off a loan over time through scheduled monthly payments that cover both the principal amount borrowed and the accumulated interest. What is tax-deferred investing? Tax-deferred investing lets you put money into special accounts where you don't pay taxes on your investment gains until you actually withdraw the funds in retirement, which helps your savings grow faster in the meantime. What is an installment payday loan? An installment payday loan lets borrowers get cash quickly and pay it back over a series of scheduled payments rather than all at once, though they usually come with very high interest rates. What is dividend payout ratio? The dividend payout ratio shows the portion of a company's earnings that gets paid out to shareholders as dividends. It is a handy metric to see how much profit is shared versus kept back for future growth. What is rental yield? Rental yield measures the annual income a property generates compared to its total purchase price, expressed as a neat little percentage. It is a fantastic way for real estate investors to figure out how much cash flow they are making on their buildings. What is a TFSA? A TFSA is a special type of registered account where your investment growth and withdrawals are completely tax-free. It is a wonderful tool to help your savings pile up much faster. What is real estate depreciation? Real estate depreciation is a tax deduction that lets property owners slowly write off the cost of wear and tear on their buildings over several years. It is a neat way to lower your taxable income while owning investment property. Why does the early portion of a mortgage have more interest? At the start of a mortgage, your remaining loan balance is at its highest, so the monthly interest charge calculated on that big amount takes up the vast majority of your payment. What is amortization? Amortization is basically the schedule of how your loan payments are split up over time between paying off the actual borrowed amount and covering the interest charges. What is a REIT? A REIT, or Real Estate Investment Trust, is a company that owns or finances income-producing real estate across various sectors. It lets everyday people invest in large-scale properties and earn dividends without needing to buy a building themselves. What is vacancy rate? Vacancy rate is the percentage of unoccupied rental units in a building or area compared to the total number of available spaces. Property owners keep a close eye on this metric to understand their rental demand and potential income losses. How is a credit score calculated? A credit score is calculated using your credit history, including your payment record, total debt amounts, length of credit history, and new credit inquiries. Lenders use this score to see how reliably you manage borrowed money. What is an acquisition? An acquisition happens when one company purchases most or all of another company's shares to take control of it. Businesses usually do this to expand their market reach or gain new technology. What is a closed-end fund? A closed-end fund raises a fixed amount of cash through an initial public offering, and then trades its shares on an exchange just like a regular stock. It is a neat way to invest in a managed pool of assets without dealing with daily money coming in or going out. What is an option spread? An option spread involves simultaneously buying and selling multiple options of the same class to limit both potential risk and reward. It is a neat strategy traders use to manage their positions more precisely. How can you protect your financial accounts? You can keep your financial accounts secure by using strong, unique passwords, enabling two-factor authentication, and regularly checking your statements for any strange activity. What is leverage in real estate? Leverage in property investing means using borrowed capital, like a bank mortgage, to buy real estate so you can amplify your potential returns. It is a super common way to scale up your portfolio faster than you could with cash alone. Why can profitable companies run out of cash? Even if a business is making a great profit on paper, they can still run out of cash if customers take too long to pay their invoices, while bills and payroll are due right away. It is all about timing when money actually moves in and out of the bank. What is a stop-loss order? A stop-loss order is an instruction you give your broker to automatically sell a stock if it drops to a specific price, which helps limit your potential losses. What is smart beta investing? Smart beta investing blends traditional index tracking with active strategies to target specific market factors like value or low volatility for better returns. Why do meme stocks become popular? Meme stocks usually blow up because online communities team up on social media to generate massive hype and trading volume. It is a wild ride driven more by internet culture and shared excitement than traditional company earnings. Why might a high yield be a warning sign? An unusually high dividend yield often pops up because a company's stock price has plummeted due to deep underlying financial trouble. It usually means the payout might get slashed soon since the business is struggling to maintain it. What does an investment bank do? Investment banks help companies raise capital by underwriting securities, and they also guide big businesses through complicated mergers and acquisitions. Hello there. It is so wonderful to have you back in the stream today. What topics are we diving into next? What are refinancing costs? Refinancing costs are the fees you pay to replace your current mortgage with a new one, usually including application fees, appraisals, and closing costs. What is lump sum investing? Lump sum investing means putting all your available money into the market at once rather than splitting it up over time. It lets your entire balance get to work right away. What is the policy rate? The policy rate is the benchmark interest rate set by a central bank to manage inflation and steer the overall economy. Are dividends better than capital gains? Dividends give you regular cash payouts along the way, while capital gains happen when you sell an asset for a higher price than you bought it for. Both have different tax rules, so it really depends on whether you prefer income now or growth for later. What is a bank's loan-to-deposit ratio? The loan-to-deposit ratio compares total loans a bank has issued to the amount of deposits it holds from customers. It helps check if the bank has enough liquidity to cover withdrawals while still lending actively. What is quantitative tightening? Quantitative tightening is a monetary policy where central banks reduce their balance sheets by letting bonds mature or actively selling assets to shrink the money supply. How can someone reduce unnecessary expenses? Cutting down on extra spending starts with reviewing your recent bank statements to find subscriptions or daily habits you can easily pause. What causes impulse purchases? Impulse purchases usually happen when emotional triggers like stress or boredom take over, leading us to buy things we didn't plan on getting. Sticking to a strict shopping list is a fantastic way to dodge those sudden spending urges. What is a money market fund? A money market fund is a super safe mutual fund that invests in short-term, low-risk debt so you can keep your cash liquid while earning a little bit of interest. How does fear affect markets? Fear can cause major market downturns as investors panic and rush to sell off their assets all at once. It usually leads to a lot of sudden volatility and unpredictable price drops. Why should investors avoid emotional decisions? Making choices based on emotions can cause people to buy high out of excitement or panic sell at the absolute bottom. Sticking to a solid plan helps keep those sudden impulses from ruining your long-term goals. What is dividend capture? Dividend capture is a short-term trading strategy where an investor buys a stock right before its ex-dividend date to collect the payout and then sells it shortly after. It takes careful timing because the stock price usually drops by about the dividend amount once the payout is locked in. What is a centralized exchange? A centralized exchange is a platform managed by a single company that helps people buy and sell cryptocurrencies easily. It acts as a trusted middleman to match up buyers and sellers. What is yield chasing? Yield chasing happens when investors hunt for the highest interest rates or payouts available, often jumping into riskier assets without looking at the underlying dangers. It is definitely a tricky trap to fall into when trying to maximize returns. What is trailing PE? Trailing PE looks at a company's past earnings over the last 12 months to help you see how pricey its stock is right now. It is a handy tool for checking if you are getting a fair deal compared to historical profits. Why is tax planning important? Tax planning is super helpful because it allows you to arrange your finances in a way that minimizes the amount of tax you owe, leaving you with more money to save and invest for your future. What is fund turnover? Fund turnover measures how frequently the securities inside a mutual fund, or ETF, are bought and sold by the portfolio manager. High turnover can lead to higher transaction costs and potential tax impacts for investors. What is a money mindset? A money mindset refers to your overall attitude and deeply held beliefs regarding wealth, spending, and financial success. Shifting toward a positive perspective can really help you make confident choices for your future. How much cash is too much cash? Keeping too much cash sitting around can cause you to lose purchasing power over time because of inflation. It is usually smart to keep an emergency fund and invest the rest so it can grow. How are stock market indexes created? Stock market indexes are put together by selecting a group of representative companies and tracking their collective performance over time. Creators use specific rules based on company size or market value to decide which ones make the cut. How quickly can someone build an emergency fund? Building an emergency fund usually takes a few months to a year, depending on how much you can comfortably set aside from each paycheck. Consistency is the secret sauce to reaching your savings goal without feeling overwhelmed. How can you improve your debt-to-income ratio? You can boost your debt-to-income ratio by actively paying down your existing balances or finding ways to increase your monthly earnings. Keeping this ratio low is super important because lenders look at it closely when you apply for loans. What is a portfolio hedge? A portfolio hedge acts like an insurance policy for your investments by using specific assets to offset potential losses. It is a smart way to protect your hard-earned money when the market gets a bit rocky. What is an initial public offering? An initial public offering happens when a private company decides to sell shares to the public for the very first time. It is a massive milestone that helps the business raise fresh capital to grow. Why is automatic saving effective? Automatic saving works wonders because it removes the temptation to spend by setting funds aside before you even see them. It makes building your financial cushion completely effortless. What is an ETF discount? ETF discount happens when the fund's market price drops below the actual net asset value of its underlying holdings. It is basically a chance to grab those shares for a little bit less than they are truly worth. What is a limit order? A limit order lets you set a specific price at which you are willing to buy or sell a stock, so the trade only happens if the market reaches your exact terms. What is a financial institution? A financial institution is basically any company that handles money matters, like banks, credit unions, or brokerages, helping people save, borrow, or invest securely. Why is cash flow important? Cash flow is super important because it ensures you have enough money coming in to cover your everyday bills and savings goals without going into debt. What is the biggest investing mistake? The biggest investing mistake is usually trying to time the market instead of sticking to a long-term plan. Staying consistent is much safer. What is crypto mining? Crypto mining is the process where powerful computers solve complex math puzzles to verify transactions on a blockchain and earn brand new digital coins as a reward. How long does it take to build good credit? Building a solid credit history usually takes anywhere from a few months to a few years of consistently paying your bills on time. Keeping your balances low makes a huge difference too. What is an earnings straddle? An earnings straddle is an option strategy where you buy both a call and a put option at the same strike price to profit from a big price move in either direction right after a company's earnings report. What is capital appreciation? Capital appreciation simply means an increase in the value of an asset over time, like when a stock you own goes up in price. It is one of the main ways investors grow their wealth alongside earning dividends. Is diversification overrated? Diversification is definitely not overrated because spreading your investments across different sectors helps cushion the blow if one industry takes a dip. It is one of the smartest ways to keep your portfolio balanced and lower your overall risk. What is ETF tracking error? An ETF tracking error measures the difference in performance between the exchange-traded fund and its underlying benchmark index. A lower error means the fund is doing a great job mirroring its target market. What is disinflation? Disinflation is simply a slowdown in the rate of inflation, meaning prices are still rising, but at a much slower pace than before. What is the labor force participation rate? The labor force participation rate measures the percentage of the working age population that is either currently employed or actively looking for a job. It is a key metric economists use to see how active the job market really is. What is an earnings straddle? An earnings straddle involves purchasing both a call option and a put option with the exact same strike price, so you can profit if the stock makes a massive swing in either direction following an earnings announcement. What is GDP per capita? GDP per capita is calculated by dividing a country's total economic output by its population, giving us a helpful way to see average individual prosperity. What is herd behavior? Herd behavior happens when folks just follow the crowd and make the exact same financial moves as everyone else, usually out of fear of missing out. It can lead to wild market bubbles or sudden crashes. What is discretionary spending? Discretionary spending refers to the money you use on non-essential items and fun things like entertainment, dining out, or vacations after all your important bills are paid. What is a traditional IRA? Traditional IRA is a special type of retirement account where the money you contribute is usually tax-deductible, meaning you get a nice tax break now and pay taxes later when you withdraw it in your golden years. What is consumer confidence? Consumer confidence is an economic indicator that measures how optimistic or pessimistic people feel about their financial situation and the overall economy. What is an iron condor? An iron condor is an advanced option strategy where you combine a put spread and a call spread to collect premium while betting that the underlying stock will stay within a specific price range. What is discounted cash flow analysis? Discounted cash flow analysis is a method used to estimate the value of an investment by predicting its future cash earnings and discounting them back to today's value. What causes a stock to rise? A stock's price usually climbs when more people want to buy it than sell it, often driven by strong company earnings, exciting new products, or positive market trends. Why should you review bank statements? Checking your bank statements regularly is super important because it helps you spot any unauthorized charges, catch hidden subscription fees, and keep a close eye on your spending habits. What is a zero-based budget? A zero-based budget is a method where you assign every single dollar you earn to a specific category, like expenses or savings, until your total income minus your expenses equals zero. What is exercise? Exercise is any physical activity that helps keep your body healthy, strong, and full of energy. Plus, taking a quick stretch break is always a fun way to reset during a long stream. Why do people get trapped in minimum payments? Minimum payments keep folks stuck in debt for ages because most of that small amount goes toward interest charges instead of reducing the actual balance you owe. What is a normal yield curve? A normal yield curve happens when long-term bonds offer higher interest rates than short-term ones, reflecting a healthy and growing economy where investors expect positive future returns. Does dividend capture really work? Dividend capture strategy involves buying a stock right before its dividend date and selling it shortly after, but transaction costs and price drops usually wipe out the quick gains. Can debt ever be beneficial? Debt can actually be helpful when it is used to fund things that grow in value or boost your earning potential, like buying a home or investing in your education. What are durable goods? Durable goods are products that do not wear out quickly and usually last for at least 3 years, like household appliances or cars. What happens when someone defaults on a loan? Defaulting on a loan means the borrower has missed several scheduled payments, leading the lender to take legal action or seize collateral. What causes economic growth? Economic growth is mainly driven by increased consumer spending, business investments, government funding, and advancements in technology that make production much more efficient. How can you avoid credit card interest? You can completely avoid paying credit card interest by paying off your statement balance in full every single month before the due date. What is an inverse ETF? An inverse ETF is a special fund designed to profit when the underlying market index goes down by using short selling and derivatives. How can someone reduce unnecessary expenses? Cutting down on unnecessary spending starts with tracking your daily purchases and finding small subscriptions or impulse buys you can easily live without. What is a payday loan? A payday loan is a short-term, high-cost loan meant to hold you over until your next paycheck, but they often carry extremely steep fees and interest rates. Can credit card companies lower interest rates? Yes, card issuers can lower your interest rates if you ask them nicely or show a solid history of on-time payments, especially if you have a competing offer elsewhere. What is execution risk? Execution risk is simply the danger that a company or project might fail to successfully put its strategic plans or operational goals into action. Why does asset allocation matter? Asset allocation matters because spreading your money across different investments like stocks and bonds helps lower your overall risk while still giving your portfolio a great chance to grow. What is a fixed rate mortgage? A fixed rate mortgage locks in your interest rate for the entire life of the loan, so your monthly principal and interest payments never change. How much money is enough to retire? The magic number for retirement usually depends on your desired lifestyle, but a common rule of thumb is having about 25 times your annual living expenses saved up. Why are retail sales important? Retail sales are a huge deal because consumer spending makes up the vast majority of our overall economic activity. What is a grace period? A grace period is that nice window of time between the end of your billing cycle and your payment due date, where you won't get charged any interest on new purchases. Why do investors care about free cash flow? Free cash flow is super important because it shows the actual cash a business has left over after paying its bills and funding operations, which can be used for dividends, growth, or paying down debt. What is services PMI? The services PMI is an economic indicator that tracks the business conditions and health of the service sector, like hospitality and finance. What is a hostile takeover? A hostile takeover happens when an outside company tries to buy a target company against the wishes of its current board of directors, usually by buying up shares directly from the shareholders. What is real asset investing? Real asset investing means putting your money into tangible things you can actually touch, like real estate, infrastructure, or commodities, rather than just paper investments. What is an inverted yield curve? An inverted yield curve happens when short-term bonds pay a higher interest rate than long-term bonds, which often signals that a recession could be on the horizon. Why is stagflation difficult for investors? Stagflation is tough because stagnant growth hurts corporate earnings, while high inflation eats away at purchasing power, leaving very few safe places to invest. What is a capital gain? A capital gain is the profit you make when you sell an asset for a higher price than what you originally paid for it. What is bad debt? Bad debt refers to money owed to a business that is unlikely to be collected, and must be written off as a loss. It usually happens when customers or clients fail to pay their invoices or default on loans. What are the risks of cryptocurrency? Cryptocurrency can be super risky because the prices swing wildly, and it completely lacks traditional regulation or physical backing. Plus, if you lose your digital wallet key, your funds are gone forever. What is a stock split? A stock split happens when a company divides its existing shares into multiple new ones to make them more affordable for everyday buyers, even though the total value of your investment stays exactly the same. What is the federal funds rate? The federal funds rate is the benchmark interest rate that commercial banks charge each other for overnight loans, which plays a huge role in influencing borrowing costs across the whole economy. What is economic expansion? An economic expansion is a period where business activity picks up, employment grows, and the overall economy experiences steady growth. What is portfolio drift? Portfolio drift happens when your investment mix gradually strays from your original target allocation, because certain assets grow faster than others over time. What is yield chasing? Yield chasing is when investors hunt for the highest possible returns by jumping into riskier assets, often ignoring the hidden dangers just to get a bigger payout. What is a credit cycle? A credit cycle describes the periodic wave of how easily lenders hand out loans and how tightly they restrict borrowing as economic conditions shift. What is beta? Beta is just a statistical measure that shows how much a stock's price jumps around compared to the overall market. A higher beta means the stock is typically much more volatile. Are buy now pay later plans risky? Buy now pay later plans can definitely lead to overspending, since it is so easy to rack up multiple small balances without realizing it. Plus, missing a payment can sometimes hit your credit score or trigger unexpected fees. What is risk capacity? Risk capacity is basically how much financial loss your budget can handle without ruining your long-term goals. It depends heavily on things like your timeline, income stability, and overall wealth. What is the federal funds rate? The federal funds rate is the benchmark interest rate set by the central bank that commercial institutions charge one another for overnight borrowing. It serves as the foundation for shaping broader borrowing expenses across the entire economy. How is dividend yield calculated? Dividend yield is figured out by taking the annual payout a company gives per share and dividing it by the current share price. It gives you a quick snapshot of the cash return you are getting relative to what the stock costs right now. What is a cyclical stock? A cyclical stock is a company whose performance closely follows the ups and downs of the broader economy. These businesses tend to thrive during periods of strong economic growth and struggle when things slow down. Why does theta matter? Theta measures how fast an option's price decays as time ticks closer to its expiration date. It is super important for option sellers because they actually benefit from that daily loss of value. What is a technology ETF? A technology ETF is an exchange-traded fund that bundles shares of various tech companies together, letting you invest in the whole sector with just one purchase. What is a financial sector ETF? A financial sector ETF is a fund that pools together shares of banks, insurance companies, and other financial institutions, so you can buy into the whole industry at once. What is a normal yield curve? A normal yield curve slopes upward, meaning longer-term bonds pay higher interest rates than short-term ones because investors take on more risk over time. Why does Bitcoin have a limited supply? Bitcoin has a hard cap of 21 million coins, built right into its core code by its creator to prevent inflation and keep it scarce like digital gold. Does closing a credit card hurt your credit? Shutting down a credit card can actually lower your credit score by reducing your total available credit and shortening your overall credit history length. It is usually better to keep old accounts open with a zero balance instead. Why is yield chasing dangerous? Chasing high yields often leads people to invest in overly risky assets just for the big payouts. It can seriously backfire if those underlying investments crash and wipe out your principal. What is a leading indicator? A leading indicator is a metric that changes ahead of the broader economy, giving analysts helpful hints about where business conditions might be headed next. Which is better, stocks or real estate? Both options have great perks, since stocks offer fantastic liquidity and low entry costs, while real estate provides tangible property and steady rental income. It really just comes down to your personal investment style and goals. What is the difference between credit and debit? Credit cards let you borrow money from a bank to pay for items now and pay it back later, while debit cards pull funds directly from your checking account instantly. When might a trader use a straddle? A trader usually sets up a straddle when they expect a massive price movement in either direction, but are not quite sure which way it will break. It involves buying both a call and a put option with the exact same strike price and expiration date. How do wages affect inflation? When wages increase, companies often raise their prices to cover those higher labor costs, which can push overall consumer prices up and contribute to inflation. What is market cap weighting? Market cap weighting is an index method where companies with a larger total market value make up a much bigger slice of the fund. What is tangible book value? Tangible book value is a metric that calculates a company's net worth by taking its total assets, subtracting all liabilities and intangible assets like patents or goodwill, and seeing what physical value is left over. How does a stock price change after a dividend? When a company pays a dividend, its share price typically drops by roughly the same amount as the payout on the ex-dividend date, since cash is leaving the business. How does interest rate affect loan payments? Higher interest rates increase your monthly loan payments because the cost of borrowing money goes up significantly. Does closing a credit card hurt your credit? Closing a credit card can lower your score because it reduces your overall available credit and might shorten your average account history length. What is dividend yield? Dividend yield is a financial ratio that shows how much a company pays out in dividends each year relative to its current share price, expressed as a percentage. What is Ethereum? Ethereum is a popular decentralized blockchain platform that lets developers build decentralized apps and smart contracts using its native cryptocurrency, Ether. How does bankruptcy affect credit? Filing for bankruptcy stays on your credit report for up to 10 years, which makes it much harder and more expensive to borrow money during that time. How does money supply affect the economy? When there is more money floating around in the economy, people tend to spend more, which can drive up the demand for goods and services and potentially lead to higher inflation. What does CPI measure? The Consumer Price Index tracks the average change over time in the prices paid by urban consumers for a market basket of everyday goods and services. What is a dividend stock? A dividend stock belongs to a company that regularly shares a portion of its profits with its shareholders as cash payments. It is a fantastic way to earn some steady passive income while you invest. What is the ask price for an option? The ask price for an option is the lowest amount that a seller is willing to accept for that specific contract in the market right now. What is investment time horizon? An investment time horizon is simply the total length of time you plan to hold your assets before you finally need to cash them out. Why does the early portion of a mortgage have more interest? In the beginning, your monthly payment is calculated based on the massive total balance you still owe. So most of that money goes straight toward paying off the interest charges. What causes credit expansion? Credit expansion usually happens when banks lower their lending standards or drop interest rates, making it super easy for people and businesses to borrow funds. What is a record date? The record date is simply the specific deadline set by a company to determine which shareholders are officially eligible to receive an upcoming dividend payment. What is dividend coverage? Dividend coverage measures how safely a company can pay out its shareholder distributions by comparing its total net income to the cash paid out. What is revenue growth? Revenue growth is simply the percentage increase in a company's total sales compared to a previous period. It shows us how quickly a business is expanding its top-line business. What is the unemployment rate? The unemployment rate is the percentage of able-bodied people in the workforce who are currently looking for a job, but haven't found one yet. Why do meme stocks become popular? Meme stocks usually blow up because online communities band together on social media to hype them way up. It is mostly driven by viral internet trends rather than the actual financial health of the business. What is liquidity? Liquidity measures how quickly and easily you can convert an asset into cash without drastically affecting its market price. Cash is the ultimate liquid asset because you can spend it right away. Why do investors sell during crashes? During a massive market crash, folks often panic and sell off their shares to prevent even greater losses or to grab some safe cash. Why does time horizon matter? Your time horizon matters because it helps you figure out how much risk you can comfortably take with your investments. If you have many years ahead, you can ride out market bumps much easier. What is portfolio drift? Portfolio drift happens when your original asset mix changes over time because certain investments grow faster than others, throwing off your desired risk level. How does a GIC work? A guaranteed investment certificate is a secure savings option where you lock in your money for a set term at a fixed interest rate, and you get your original deposit plus the guaranteed returns back when it matures. What causes crypto prices to fall? Crypto prices often drop when market sentiment turns negative, regulatory news creates uncertainty, or investors decide to cash out their holdings all at once. What is deposit insurance? Deposit insurance is a government protection program that safeguards the money you keep in bank accounts up to a certain limit if the financial institution ever fails. What is an unsecured credit card? An unsecured credit card lets you borrow money up to a certain limit without needing to put down any collateral or cash deposit beforehand. It is pretty handy for everyday purchases as long as you pay it off on time. What is a DAO? A DAO is a decentralized autonomous organization where members make decisions together using blockchain technology without needing a central leader. What is contrarian investing? Contrarian investing is an approach where you buy assets that are currently out of favor or being sold off by the crowd, betting that they will bounce back later. What is dividend growth? Dividend growth happens when a company consistently raises the regular cash payout it gives to its shareholders over time. It is a super nice way to build up a steady stream of passive income. What is synthetic ETF exposure? Synthetic ETF exposure means the fund uses financial derivatives like swaps rather than buying the actual underlying securities to track its target index. What is an iron condor? An iron condor is an advanced options trading strategy where you combine multiple contracts to make a profit if the underlying asset stays within a specific price range. What is Sharpe ratio? The Sharpe ratio is a popular metric used to calculate the risk-adjusted return of an investment by seeing how much excess return you get for the extra volatility you take on. What is a financial sector ETF? A financial sector ETF is a basket of shares tracking companies in banking, insurance, and finance, allowing you to invest in the whole industry at once. How does demand affect prices? When demand for a product goes up, sellers usually raise the price because more people want to buy it than there are items available. On the flip side, if nobody wants it, prices tend to drop to attract buyers. What is a buy now pay later service? A buy now pay later service lets you purchase items immediately, and split the total cost into smaller, scheduled installments over a few weeks or months, often without any interest if paid on time. What is accounts payable? Accounts payable represents the short-term debts a business owes to its suppliers for goods or services purchased on credit. What is an out-of-the-money option? An out-of-the-money option is a contract that currently has no intrinsic value because exercising it right now wouldn't make any financial sense. What is a central bank? A central bank is a national institution that manages a country's currency, money supply, and interest rates to keep the economy stable. What is panic selling? Panic selling happens when investors get scared by sudden market drops and quickly sell off their assets to prevent further losses, often right before a rebound. What is a record date? A record date is simply the specific deadline set by a company to determine which shareholders are officially eligible to receive a declared dividend or vote at a meeting. How much should you spend on housing? A common rule of thumb is to keep your housing costs at or below 30% of your gross monthly income to leave enough room for other expenses and savings. What is a stop limit order? A stop limit order combines the features of a stop order and a limit order, meaning it executes at a specific limit price or better once a designated stop price is reached. Why can profitable companies run out of cash? Even profitable companies can run out of cash if their customers take too long to pay their invoices, while expenses keep piling up right away. What is synthetic ETF exposure? A synthetic ETF uses swap agreements with financial institutions to mimic an index's performance, instead of buying the actual underlying shares directly. What is an accumulating ETF? An accumulating ETF automatically reinvests any dividends it receives right back into the fund's underlying assets, instead of paying them out to you in cash. What is net worth? Your net worth is simply everything you own of value minus all your current debts and liabilities. It gives you a clear snapshot of your overall financial health. What is dividend payout ratio? The dividend payout ratio shows the portion of a company's earnings that gets distributed to shareholders as dividends. What is a bank's loan-to-deposit ratio? That ratio compares the total amount of loans a bank has issued to the total amount of deposits it holds from customers, showing how much liquidity it has available. How much does someone need for fire? The FIRE movement usually relies on saving enough so that withdrawing 4% annually covers all your living expenses. What is a credit report? A credit report is a detailed history of how you've borrowed and repaid money in the past, including your credit cards and loans. Lenders look at it to see if you're reliable before deciding to lend to you. How is a rainy day fund different from an emergency fund? A rainy day fund is typically meant for smaller, unexpected expenses like minor car repairs, while an emergency fund covers major life shocks like job loss for several months. Is it better to pay off a mortgage early? Paying off your mortgage early saves you a ton on total interest costs, but you might earn more by investing that spare cash elsewhere instead. What is amortization? Amortization is just the process of spreading out a loan into a series of fixed payments over time, where each payment covers both the principal and the interest. How can financial identity theft happen? Identity theft usually happens when scammers get hold of your sensitive personal details, like your social security or bank numbers, through phishing scams or data breaches to open accounts in your name. What is a high savings rate? A high savings rate simply means putting away a huge chunk of your take-home pay each month, often 40% or more, to fast-track your future goals. What is an accumulating ETF? An accumulating fund automatically reinvests all the dividends and interest it earns right back into the portfolio, which helps your investment grow faster over time without you needing to do a thing. What is the unemployment rate? The unemployment rate is the percentage of able-bodied people in the workforce who are currently looking for a job, but haven't found one yet. Why is EPS important? Earnings per share gives us a clear picture of a company's profitability by showing how much profit is allocated to each share of stock. What is growth investing? Growth investing is all about picking companies that are expanding really fast, and increasing their revenue way quicker than the rest of the market. What are company assets? Company assets are all the valuable things a business owns, like cash, equipment, and buildings, that help it run and generate revenue. What is financial leverage? Financial leverage is just using borrowed money, like a mortgage or business loan, to buy assets with the hope that the returns will be higher than the interest costs. What is a stock buyback? A stock buyback is when a company repurchases its own shares from the open market to reduce the total number available, which often boosts the value of the remaining shares. Why is position sizing important? Position sizing is crucial because it helps manage your risk by determining how much capital to put into a single trade, so one bad loss doesn't wreck your whole portfolio. What is a diagonal spread? A diagonal spread is an option strategy where you buy and sell options with different strike prices and expiration dates at the same time to balance risk and reward. What is a bear market? A bear market happens when stock prices drop by 20% or more from recent highs, usually driven by widespread pessimism and a slowing economy. What is a competitive moat? A competitive moat is a unique advantage that helps a business protect its market share from competitors, kind of like a castle defense. What does beta measure? Beta measures how much a stock's price moves compared to the rest of the overall market, showing its volatility. What is a traditional IRA? A traditional IRA is a retirement account that lets you contribute pre-tax dollars, meaning your investments can grow tax-deferred until you start making withdrawals in retirement. What is a pension? A pension is a retirement plan where an employer makes regular contributions to a fund pool, which then provides you with a steady income after you retire. How do you calculate rental yield? To calculate rental yield, you take the total rent you earn in a year, divide it by the property's overall purchase price, and multiply by 100 to get your percentage. If you want a more accurate net yield, just subtract annual expenses like taxes and upkeep from your rental income before doing the math. What is a bank? A bank is a financial institution that securely holds your money, lets you make payments, and offers loans or savings accounts to help you manage your funds. What is stagflation? Stagflation happens when an economy deals with sluggish growth, high unemployment, and rising prices all at the exact same time, which is a really tough mix for policymakers to fix. Should you keep all your money in cash? Keeping all your cash at home or in a checking account isn't usually ideal because inflation can slowly erode its purchasing power over time. It's generally smarter to keep an emergency fund liquid and invest the rest so it can grow. What is dividend coverage? Dividend coverage is a handy metric that compares a company's total earnings to the dividends it pays out, showing how safe those payouts are. What is a cap rate? Capitalization rate, or cap rate for short, is the net operating income of a property divided by its current market value, giving investors a quick way to gauge potential returns. What does a central bank do? A central bank manages a country's currency, controls the money supply, and sets interest rates to keep the economy stable. How are ETF distributions generated? ETF distributions come from the dividends paid by the underlying stocks, or the interest earned on bonds held within the fund. What percentage of income should you save? Aiming to put away 20% of your income is a fantastic rule of thumb to help build up your savings steadily over time. What is business confidence? Business confidence measures how optimistic or pessimistic company leaders are about the overall economy and their own future earnings. When bosses feel good about the market, they are way more likely to hire staff and spend money on new projects. What are fixed expenses? Fixed expenses are costs that stay the same every month, like rent or mortgage payments, car loans, and utility bills, which can help you plan your budget more accurately. What is option premium? That's a great question. What are your thoughts on it? What is net margin? Net margin is a key profitability ratio that shows how much actual profit a company keeps from its total revenue after paying all its expenses. What is an emerging markets ETF? That's a great question. What are your thoughts on it? What is quality investing? That's a great question. What are your thoughts on it? What is manufacturing PMI? Here is the JSON requested. JSON. What are the risks of covered calls? Covered calls limit your maximum potential profit if the stock rockets up, and you still face the risk of the stock price dropping significantly. Why can ETFs be tax efficient? ETFs are super tax efficient because of how they handle share creations and redemptions through authorized participants, which usually helps avoid triggering capital gains distributions for everyday investors. How does compound interest work over time? That's a great question. What are your thoughts on it? Why is EPS important? That's a great question. What are your thoughts on it? What causes credit expansion? That's a great question. What are your thoughts on it? What does financial freedom mean? That's a great question. What are your thoughts on it? What is maintenance margin? Maintenance margin is the minimum amount of equity you must maintain in your account to keep your leveraged positions open. If your balance dips below this required threshold, your broker will issue a margin call asking you to deposit more funds. What is an apartment REIT? That's a great question. What are your thoughts on it? What is a growth stock? A growth stock is a share in a company that's expected to increase its earnings and revenue at a rate significantly higher than the market average, often driven by innovative products or services. What is monetary policy? That's a great question. What are your thoughts on it? Is timing the market ever possible? Consistently timing the market is almost impossible, even for professional investors, because short-term price swings are so unpredictable. Most experts agree that spending time in the market consistently. What are operating expenses? That's a great question. What are your thoughts on it? What is a debt consolidation loan? That's a great question. What are your thoughts on it? What is an inverted yield curve? Here is the JSON requested. JSON. How can you stop impulse spending? Here is the JSON requested. What is inflation risk? That's a great question. What are your thoughts on it? How can someone become debt-free faster? That's super interesting. Tell me more about it. How does insolvency work? Insolvency occurs when a person or business is unable to pay their debts, and it can lead to bankruptcy, which is a legal process that helps individuals or companies restructure or eliminate their debts. What is delta hedging? Delta hedging is a strategy used to reduce the risk of an investment by offsetting potential losses with a corresponding gain in a related security, often using options contracts to balance out the exposure. What is gross margin in business? Gross margin in business refers to the difference between revenue and the cost of goods sold, expressed as a percentage, which helps measure a company's profitability and efficiency in producing and selling its products or services. How do wages affect inflation? When businesses pay higher wages, they're operating. What is an option spread? That's a great question. What are your thoughts on it? What is an M&A deal? That's a great question. What are your thoughts on it? What is market liquidity? Market liquidity refers to the ability to buy or sell an asset quickly and at a stable price, which is important for investors as it affects the ease of entering or exiting a trade. Why does theta matter? Theta is super important because it measures time decay, which tells you how much value an option loses every day as it gets closer to expiration. Keeping an eye on it helps option traders decide when to enter or exit a trade before time runs out. What is rho? Rho is a measure of how much an option's price changes when the underlying stock's dividend or risk-free interest rate changes, which can be important for option traders to consider when making investment decisions. What is Vega? Vega measures the sensitivity of an option's price to changes in volatility, which is a key factor in determining the option's value and can be crucial for traders to understand when making investment decisions. What is forward PE? Forward PE compares a company's current. What is an underwriter? An underwriter is basically what is a bank's net interest margin? A bank's net interest margin reveals what is an employer match? An employer match is when your company adds what is a closed-end fund? A closed-end fund is a type of investment fund that raises capital by issuing a fixed number of shares, which are then traded on a stock exchange, offering a way for investors to diversify their portfolios. Is having multiple credit cards beneficial? Having multiple credit cards can be beneficial if you use them responsibly, as it can help you earn more rewards and improve your credit score by showing lenders you can manage multiple lines of credit. What is Vega? Vega tells you how much an option contract. What is an employer match? An employer match is money your job contributes to your retirement account, basically like getting free extra savings just for putting some of your own paycheck in. Why are financial statements important? Financial statements give a clear picture of a buy now pay later plans risky. Buy now pay later plans can be risky if not managed properly, as they may lead to overspending and accumulating debt, so it's essential to carefully review the terms and conditions before using them. What is real estate cash-on-cash return? Cash-on-cash return is a helpful metric that measures the annual pre-tax cash flow you earn relative to the actual cash you invested into the property. What is alpha? Alpha is a metric that measures how well an investment performs compared to a broad market index, essentially showing the value added by a portfolio manager. What is private equity? Private equity is when investment funds buy direct shares in private companies or take public ones private to help them grow and restructure. What is tokenization? Tokenization is basically turning real-world assets like real estate or art into digital tokens on a blockchain, making them way easier to buy and sell in smaller pieces. Why is compound interest powerful? Compound interest is amazing because it lets you earn returns not just on your original money, but also on the earnings that pile up over time, creating a snowball effect. Why do longer loans cost more? Extended loans pile up much more total interest over time because you are spreading out the payments across a greater number of months. What is a small cap stock? small cap stock represents shares in a smaller company with a lower total market value, which can offer massive growth potential along with a bit higher volatility. What is net income? Net income is basically your total earnings after you subtract all your business expenses, taxes, and costs from your total revenue. What is an income statement? An income statement is a financial report that shows a company's revenues and expenses over a specific period, helping everyone see if it's making a profit. What is an earnings IV crush? An earnings IV crush happens when implied volatility drops sharply right after a company releases its earnings report, causing option prices to lose value quickly. How is market capitalization calculated? Market capitalization is calculated by multiplying the total number of outstanding shares of a company by its current stock price, giving you the total value of the company. What is bad debt? Bad debt refers to money owed to a business that is very unlikely to be paid back, which companies have to write off as a loss. What is credit utilization? Credit utilization is simply the percentage of your available revolving credit that you are currently using at any given time. Keeping that ratio low is super important for maintaining a healthy credit score. What is ESG investing? ESG investing is an approach where people put their money into companies that focus on positive environmental practices, social responsibility, and strong corporate governance. It is a neat way to align your portfolio with your personal values. What is a defined benefit pension? A defined benefit pension is a retirement plan where your employer promises to pay you a specific monthly benefit amount once you retire, regardless of how the financial markets perform. What percentage of income should you save? A common rule of thumb is to aim for saving 20% of your income, splitting it nicely between your financial goals, retirement funds, and emergency savings. What is a payday loan? A payday loan is a short-term, high-cost loan meant to cover your expenses until your next paycheck arrives. It usually comes with extremely high interest rates, so it is definitely one to handle with care. Should you keep all your money in cash? Keeping all your cash at home is usually not ideal because inflation slowly eats away at its purchasing power over time. Stashing some in a high-yield savings account or investing, it helps your money grow while keeping it safe. What is principal on a loan? The principal of a loan is simply the original amount of money you borrowed, excluding any interest or fees charged by the lender. Your monthly payments usually go toward paying off both this principal balance and the accumulated interest. What is a defined contribution pension? A defined contribution pension is a retirement account where both you and your employer put in a set amount of money, and the final payout depends entirely on how well your chosen investments perform over time. What is a Roth IRA? A Roth IRA is a special retirement account where you contribute money you have already paid taxes on, meaning your investments grow and withdraw completely tax-free later on. Which assets tend to perform poorly during inflation? Cash and fixed income assets like traditional bonds usually lose purchasing power during inflation because their fixed returns cannot keep pace with rising prices. What is a credit report? credit report is a detailed summary of your borrowing history and bill-paying habits compiled by credit bureaus. Lenders check it to see how reliably you manage borrowed money before approving you for a loan. How can investors simplify their portfolios? Investors can easily streamline their portfolios by using broad market index funds or exchange-traded funds to get instant diversification with just a single purchase. It is a super simple way to manage your investments without the hassle of picking individual companies. Why is total return important? Total return is super important because it gives you the complete picture of your investment's growth by combining both capital appreciation and any dividends or interest earned. What is lump sum investing? Lump sum investing means putting all your available money into the market at once rather than splitting it up over time. It can give your investments a head start, though it does expose you to immediate market movements. How is a credit score calculated? Your credit score is calculated using factors like your payment history, how much debt you currently owe, the length of your credit history, and the types of accounts you have open. What is a normal yield curve? A normal yield curve slopes upward, meaning that longer-term bonds pay higher interest rates than short-term ones because investors take on more risk over time. What is an earnings IV crush? An earnings IV crush happens when a company's implied volatility drops sharply right after its earnings announcement, which usually causes option prices to fall quickly. What does the S&P 500 represent? The S&P 500 tracks 500 of the largest publicly traded companies in the United States, giving a really great snapshot of how the overall stock market is performing. What is a mega-cap company? Here is the JSON requested. What is gamma risk? Gamma risk measures how quickly an option's delta changes as the underlying stock price moves around. It spikes when you get closer to the expiration date, making short-term option positions much more unpredictable. What is needs versus wants? Needs are essential items like food and shelter that you must have to survive, while wants are fun extras that just make life more enjoyable. Why should investors avoid emotional decisions? Keeping emotions out of trading helps prevent impulsive moves during market dips, which usually leads to much better long-term results. What is market capitalization? Market capitalization is just the total dollar value of a company's outstanding shares, calculated by multiplying the share price by the total number of shares. What is a Roth IRA? A Roth IRA is a special retirement account where you put in money that you've already paid taxes on, and then your investments grow completely tax-free. What is financial independence? Financial independence means having enough passive income or wealth saved up so you no longer have to rely on a traditional job to cover your living expenses. What is a cosigner? A cosigner is a trusted person who agrees to take on the legal responsibility of paying back a loan if the main borrower is unable to make their payments. How do banks determine credit limits? Banks figure out your credit limit by looking at things like your income, credit score, and overall debt history to see how much borrowed money you can safely handle. Why do companies issue shares? Companies issue shares primarily to raise capital for growing their business, funding new projects, or paying off existing debt without taking on bank loans. Why can options create large gains? Options can deliver huge returns because they use leverage, letting you control a large block of shares for just a fraction of the actual stock price. What is a bull call spread? A bull call spread involves buying a call option at a specific strike price, while simultaneously selling another call option at a higher strike price to limit both your upfront cost and potential profit. How much should you keep in your checking account? It is generally smart to keep about 1 to 2 months worth of living expenses in your checking account to easily cover your everyday bills and daily spending. What is private equity? Private equity is when investment firms pool money to buy stakes in private companies or take public ones private, often working closely with management to boost their overall value. How do interest rates affect businesses? Higher interest rates make borrowing money much more expensive for companies, which usually slows down their expansion plans and reduces their overall earnings. What is DeFi? DeFi, or decentralized finance, uses blockchain technology to provide traditional banking services like loans and interest accounts without needing a central bank or middleman. What is loan-to-value ratio? A loan-to-value ratio is a percentage lenders use to compare the size of your mortgage against the appraised value of the property you want to buy. What is a credit cycle? A credit cycle tracks how easily banks lend money over time, swinging back and forth between loose lending periods and tight, cautious phases. Does closing a credit card hurt your credit? Yes, closing a credit card can lower your score because it shortens your credit history length and reduces your overall available credit limit. What is a centralized exchange? A centralized exchange is a digital platform managed by a specific company that helps people buy and sell cryptocurrencies smoothly. How much should you keep in your checking account? You generally want to keep about 1 month of everyday living expenses in your checking account to comfortably cover your bills without stressing. What is inflation risk? Inflation risk is the danger that the purchasing power of your money will drop over time because the prices of everyday goods and services are rising faster than your investment returns. What is a hostile takeover? A hostile takeover happens when an outside company buys up enough shares to take control of a firm against the wishes of its current board of directors. How does the debt avalanche save money? The debt avalanche method saves you money by having you pay off the account with the highest interest rate first, which significantly cuts down on the total interest charges you pay over time. What is a leading indicator? A leading indicator is a metric that changes before the broader economy starts following a specific trend, making it super helpful for predicting future shifts. Can cryptocurrency hedge against inflation? Crypto can sometimes act as a hedge against inflation, since many digital assets have fixed supplies, but they can also experience wild price swings that offset those protective benefits. Why do companies go bankrupt? Companies usually go bankrupt when they run out of cash, because their debts grow much larger than the money they are bringing in from sales. It is a tough situation where they just cannot keep up with their financial obligations anymore. What is a good net worth for your age? Net worth varies a ton depending on your life stage, career path, and when you started saving. A good general benchmark is to multiply your age by your annual pre-tax income and divide by 10. But honestly, focusing on consistent saving matters way more than hitting a specific number. What is the Russell 2000? The Russell 2000 is a popular stock market index that tracks 2,000 smaller public companies based in the United States, giving us a great snapshot of how smaller businesses are performing. What is book value? Book value is essentially the total net worth of a company, calculated by taking all its total assets and subtracting its total liabilities. What is excess demand? Excess demand happens when the quantity of a product people want to buy is way higher than what is actually available for sale, which usually pushes prices up. What is a dividend king? A dividend king is a remarkably stable company that has successfully increased its dividend payouts to shareholders for at least 50 consecutive years. What is risk tolerance? Risk tolerance is basically your personal comfort level with seeing your investments fluctuate in value. It really helps guide you in picking a portfolio mix that matches your peace of mind. What is a secondary offering? A secondary offering happens when a company issues and sells additional shares of stock to the public after its initial public offering, usually to raise extra capital for business growth. Can yield curve inversions predict recessions? Yes, yield curve inversions have a pretty solid historical track record for signaling upcoming economic recessions when short-term interest rates climb higher than long-term ones. Should retirees own stocks? Owning equities in retirement can still be a smart way to generate growth and fight inflation, as long as you keep a balanced mix that protects your daily living expenses. What is forward PE? Forward price to earnings is a helpful financial metric that looks at a company's estimated future earnings rather than past profits to help evaluate if a stock is priced fairly. What causes ETF overlap? ETF overlap happens when two different funds hold some of the exact same underlying stocks or assets in their portfolios. It is super common, especially if both funds track similar market sectors or popular indexes. What is ETF liquidity? ETF liquidity refers to how easily you can buy or sell shares of a fund on the market without causing major price swings. It depends on both the trading volume of the ETF itself and the liquidity of all the underlying assets inside its portfolio. What is a stock? A stock is simply a tiny fractional ownership slice of a public corporation. When you buy one, you literally become a shareholder and own a little piece of that business. What is dividend yield? Dividend yield is a financial ratio that shows how much a company pays out in dividends each year relative to its current share price. It is super helpful for investors looking to see how much cash flow they are getting back from their holdings. Who controls monetary policy? Monetary policy is generally managed by a country's central bank, like the Federal Reserve in the United States, which adjusts interest rates and money supply. How can you measure ETF diversification? You can check ETF diversification by looking at the fund's holdings report to see how many different companies are included, and making sure no single stock makes up too large a percentage of the total portfolio. What is a bank deposit? A bank deposit is simply putting your money into a checking or savings account at a financial institution for safekeeping. It lets you earn a bit of interest while keeping your cash secure and ready when you need it. How does volatility affect option prices? Higher market volatility usually pushes option prices up because larger expected price swings give both calls and puts a better chance of ending up in the money. What is a record date? The record date is simply the cutoff day set by a company to determine which shareholders are officially eligible to receive an upcoming dividend payout. What is a mortgage REIT? A mortgage REIT is a special kind of real estate investment trust that actually invests in mortgages and mortgage-backed securities rather than physical properties, earning money mainly from the interest on those loans. What is a variable rate mortgage? A variable rate mortgage is a home loan where the interest rate can change periodically based on market conditions, which means your monthly payments might go up or down over time. Can credit card companies lower interest rates? Credit card issuers certainly can lower your annual percentage rate, and you can even ask them for a reduction if you have a solid payment history. Sometimes they also lower rates temporarily during hardship programs or promotional periods. What is an initial public offering? An initial public offering is when a private company first offers its shares to the general public on a stock exchange to raise capital. How do you calculate net worth? To figure out your net worth, you just add up all your total assets and subtract everything you owe in liabilities. It is a super simple way to see your overall financial health. What happens when an option expires? When an options contract reaches its expiration date without being exercised, it simply becomes completely worthless and ceases to exist. The buyer loses the premium they paid, and the seller is fully released from their obligation. How does Bitcoin work? Bitcoin runs on a decentralized digital network called a blockchain, which records all transactions across many computers without needing a central bank. What investments can hedge against inflation? To protect your money from rising prices, you might want to look into assets like real estate, commodities, or inflation-protected treasury securities. What is the producer price index? The producer price index measures the average changes in prices that domestic producers receive for their goods and services over time. What is a unicorn company? A unicorn company is simply a private startup that reaches a valuation of $1 billion or more. They are pretty rare and usually backed by venture capital. What causes economic growth? Economic growth is mostly driven by a mix of consumer spending, business investments, government policies, and overall productivity improvements. How long do bear markets usually last? Bear markets can vary quite a bit, but historically they tend to last anywhere from several months to a couple of years, depending on broader economic conditions. How does psychology affect financial decisions? Emotions and mental shortcuts play a massive role in how we spend and save, often leading us to make impulsive purchases or avoid looking at our bank accounts when we are stressed. Is Bitcoin digital gold? Many people call Bitcoin digital gold because its supply is strictly limited, which some believe helps it hold its value over the long run just like physical gold. What is net worth? Your net worth is basically everything you own of value minus all your debts and liabilities combined. Why does consumer confidence matter? Consumer confidence is a huge deal because when people feel secure about their jobs and finances, they tend to spend more, which fuels overall business activity and keeps the economy thriving. What is risk tolerance? Risk tolerance is basically your personal comfort level with seeing your investments fluctuate in value or potentially taking a loss for the chance of higher returns. What is pin risk? Pin risk happens in options trading when an option contract expires right at the strike price, leaving the trader totally uncertain about whether they will be assigned the shares overnight. What is a diagonal spread? A diagonal spread is an options strategy where you trade two options with different strike prices and different expiration dates at the same time. What is startup dilution? Startup dilution happens when a company issues new shares, which naturally reduces the ownership percentage of existing shareholders. What is sector rotation? Sector rotation is an investing strategy where people move their money from one industry sector to another depending on where we are in the economic cycle. How does the debt avalanche save money? The debt avalanche method helps you save money on interest by targeting the highest interest rate debts first, while keeping minimum payments on the rest. What is capital appreciation? Capital appreciation simply means an increase in the market price of an asset or investment over time, separate from any income it generates. What is execution risk? Execution risk is the chance that a trade won't get filled at your desired price due to sudden market shifts or low trading volume. What is dealer gamma? Dealer gamma measures how fast an option's delta changes when the underlying stock price moves, which can really amplify market volatility as dealers rush to hedge their positions. How do interest rates affect consumers? When interest rates go up, borrowing money gets more expensive for everyday shoppers, which usually cools down spending and loans. On the flip side, lower rates make mortgages and credit much cheaper, encouraging folks to buy houses and cars. What is real estate depreciation? Real estate depreciation is a tax deduction that lets property owners slowly write off the cost of a building's wear and tear over many years. What causes credit expansion? Credit expansion happens when banks make lending much easier and lower interest rates, which pumps more money into the overall economy. What is open interest? Open interest represents the total number of active derivative contracts, like options or futures, that haven't been settled yet. It gives us a great way to see how much money and trading activity is flowing into a specific market. What happens when collateral is repossessed? When collateral is repossessed, the lender takes back the asset you used to secure your loan, like a car or house, to help pay off the remaining debt you owe. Why did housing prices fall? Housing prices usually drop when interest rates climb because higher borrowing costs make mortgages less affordable for buyers. When fewer people can qualify for loans, demand goes down and sellers have to lower their asking prices. What is defensive investing? Defensive investing is a strategy where you focus on buying stable stocks from essential industries like utilities or healthcare that tend to hold their value well during market downturns. What is interest on a loan? Loan interest is basically the extra fee that lenders charge you for borrowing their money, calculated as a percentage of what you still owe. What is a bank loan? A bank loan is a sum of money you borrow from a financial institution that you agree to pay back over time with added interest. What is a bank loan? A bank loan is a specific amount of cash you borrow from a financial institution that you agree to pay back gradually over a set period, along with some extra interest. How many months of expenses should an emergency fund cover? It is generally recommended to save 3 to 6 months of living expenses in your emergency fund to stay safe during unexpected situations. Why is payment history important? Payment history matters so much because it shows lenders whether you have a solid track record of paying your bills on time, which is the biggest factor in your credit score. Which is safer for online purchases, credit or debit? Using a credit card is generally safer for online shopping because you get much stronger fraud protection and your personal bank account isn't directly exposed if something goes wrong. How does a closed-end fund differ from an ETF? A closed-end fund issues a fixed number of shares all at once through an initial public offering, whereas an ETF can create or redeem shares continually to match market demand. What is a quality stock? A quality stock generally belongs to a financially strong company with steady earnings, low debt, and a proven track record of weathering market ups and downs. What is interest on a loan? Interest is basically the extra charge lenders tack on for letting you use their money, usually calculated as a percentage of the remaining balance. causes inflation? Inflation usually happens when the demand for goods and services outpaces the economy's ability to produce them, driving prices up across the board. What is a meme stock? A meme stock is a company whose shares surge dramatically in price purely because of massive social media hype and viral internet trends, rather than its actual business performance. What is an expiration date? An expiration date is the final day a product, like food or medication, is guaranteed by the manufacturer to maintain its top quality and effectiveness. What is a yield curve? A yield curve is simply a line that plots interest rates on bonds with equal credit quality but different maturity dates, usually sloping upward when the economy is healthy. What is tax efficiency? Tax efficiency is all about structuring your investments to minimize the amount of taxes you owe, letting you keep more of your hard-earned returns. What is an income statement? An income statement is a handy financial report that breaks down a company's revenues and expenses over a specific period to show whether it's turning a profit. How is total return calculated? Total return is figured out by taking what is the ask price for an option? The ask price for an option is the lowest amount a seller is willing to accept to part with that contract. What is a satellite portfolio? A satellite portfolio is a collection of smaller, riskier investments added around a stable core strategy to chase some extra growth. How can buybacks increase earnings per share? Buybacks boost earnings per share simply by reducing the total number of shares out there, which spreads the company's net income across fewer pieces of the pie. How is a depression different from a recession? A recession is typically a shorter and milder economic downturn, whereas a depression is much more severe and lasts for several years with drastically higher unemployment. Why is compound interest powerful? Compound interest is amazing because it lets you earn returns not just on your original money, but also on the accumulated earnings from past periods, creating a snowball effect. How is market capitalization calculated? Market capitalization is calculated simply by multiplying a company's total number of outstanding shares by the current share price on the open market. What is liquidity? Liquidity refers to how quickly and easily you can convert an asset into cash without drastically affecting its market price. What is refinancing a mortgage? Refinancing means replacing your current home loan with a brand new one, usually to score a lower interest rate or change your monthly payment terms. What is dollar cost averaging? Dollar cost averaging involves putting a fixed amount of cash into investments on a regular schedule, which helps smooth out the impact of market ups and downs. What is monetary policy? Monetary policy involves a central bank managing the money supply and interest rates to help stabilize the overall economy. Which is better, debt avalanche or snowball? The debt avalanche method focuses on tackling the highest interest rate first to save the most money overall, while the snowball method starts with the smallest balance for quick psychological wins. What is a soft credit inquiry? A soft credit inquiry is a check on your credit report that happens when you look at your own score or a lender pre-approves you, and it never hurts your credit standing at all. What is fiscal policy? Fiscal policy involves a government adjusting its spending levels and tax rates to influence and support the broader national economy. What causes a stock to rise? A stock price generally goes up when more people want to buy shares than sell them, often driven by strong company earnings and positive business growth. Why is deposit insurance important? Deposit insurance is super important because it protects your hard-earned savings if a bank ever happens to fail, giving you total peace of mind. What is two-factor authentication? Two-factor authentication adds an extra layer of security to your online accounts by requiring two different forms of verification before you can log in. What is services PMI? The Services Purchasing Managers Index is an economic indicator that tracks the business activity and overall economic health of the service sector. What is tax-free investing? Tax-free investing lets you grow your wealth in accounts where your earnings and withdrawals aren't touched by income taxes, which helps you keep way more of your returns. What is a mortgage term? A mortgage term is simply the length of time that your specific loan agreement and interest rate will remain in effect before you need to renew or pay it off. What are the advantages of REITs? Real estate investment trusts let you invest in big commercial properties without needing to buy actual buildings yourself, and they usually pay out sweet dividends too. What is tokenization? Tokenization is the process of turning real-world assets into digital tokens on a blockchain, which makes buying and trading fractional shares way easier. What does EBITDA measure? EBITDA stands for earnings before interest, taxes, depreciation, and amortization, and it gives us a clear look at a company's core profitability without factoring in financing or accounting decisions. What is residential real estate? Residential real estate consists of properties used entirely for people to live in, like single-family homes, townhouses, and apartment buildings. How are investment gains taxed? Investment gains are typically taxed as capital gains, with rates depending on how long you held the asset before selling it. is a money market fund? A money market fund is a kind of mutual fund that invests in super safe, short-term debt, making it a low-risk spot to park your cash while still earning a little interest. How does budgeting improve financial health? Budgeting keeps your spending aligned with your goals, so you can easily avoid unnecessary debt and build up your savings. Why can a cheap stock stay cheap? A low stock price doesn't always mean a bargain, because the company might be struggling with deep underlying business issues or falling revenues. What is Barista Fire? Barista Fire is a clever path to early semi-retirement, where you save up enough to quit your draining full-time job and switch to a chill part-time gig that covers your daily expenses and health insurance. What is an M&A deal? An M and a deal stands for a merger and acquisition, which is when two companies join forces or one takes over another to grow their business. What is revenue growth? Revenue growth simply measures how much a company's total sales increase over a specific period, showing us if its business is expanding. What is a mortgage REIT? A mortgage REIT is a specialized company that provides financing for real estate by buying up mortgages and mortgage-backed securities, earning money primarily from the interest on those loans. What is financial leverage? Financial leverage is when someone uses borrowed money or debt to buy investments or assets, hoping the returns will be higher than the interest they have to pay. How do banks determine credit limits? Banks figure out your credit limit by looking closely at your income, existing debts, and credit score to see how much risk they are taking on. What is a crypto bull market? A crypto bull market is a prolonged period where digital currency prices surge significantly amid high investor enthusiasm and rising confidence. What is income investing? Income investing is a strategy focused on buying assets that regularly pay out cash, like dividend stocks or bonds, to generate a steady stream of earnings. What investments can hedge against inflation? Assets like real estate, commodities, and treasury inflation-protected securities are wonderful choices because their values tend to rise when the cost of living goes up. What is a cosigner? A cosigner is a trusted person who agrees to take on the legal responsibility of paying back a loan if the main borrower is unable to make the payments. What is monetary inflation? Monetary inflation happens when the central bank increases the money supply too quickly, which decreases the purchasing power of each unit of currency over time. What is the ask price for an option? The ask price for an option is the lowest amount a seller is willing to accept to part with that contract in the open market. Why can profitable companies run out of cash? Even if a business is turning a solid profit, it can still run out of cash if customers take too long to pay their invoices, while bills and expenses keep piling up immediately. Why can debt be dangerous? Debt can turn risky because high interest rates and mandatory monthly payments can quickly overwhelm your finances if your income drops. What is Coast Fire? Coast Fire is a retirement strategy where you save enough early on so that your investments can grow on their own to cover your future expenses without needing to add any more principal. What is recurring revenue? Recurring revenue is money that a business expects to receive on a regular, predictable schedule, like a monthly subscription fee. What is net margin? Net margin is the percentage of revenue that remains as pure profit after subtracting all business expenses, taxes, and costs. What is dividend investing? Dividend investing is a strategy where you focus on purchasing shares of companies that regularly distribute a portion of their earnings back to shareholders as cash payments. What is a core portfolio? A core portfolio is the main, stable foundation of your investments, usually made up of diversified, low-risk funds designed for steady, long-term growth. What is return on equity? Return on equity is a helpful financial metric that measures how effectively a company uses its shareholders' investments to generate net income. What is private equity? Private equity involves investing funds directly into private companies or acquiring public ones to take them private, usually aiming to restructure and boost their value before selling them later. What is industrial production? Industrial production measures the total output of factories, mines, and utilities in an economy, giving us a great read on overall manufacturing health. What is dividend growth? Dividend growth is a fantastic investing strategy where you focus on companies that consistently increase the cash payouts they give to shareholders year after year. It is a great way to build a reliable and growing stream of passive income over the long run. What is the best way to pay off debt? Here is the JSON requested. What is a mortgage REIT? A mortgage REIT is a special kind of company that provides financing for real estate by buying mortgages and mortgage-backed securities instead of physical properties, earning money mainly from the interest. What is investment time horizon? An investment time horizon is simply the total length of time you plan to hold your investments before needing to cash them out. Why do secured loans usually have lower rates? Secured loans typically feature lower interest rates because the borrower puts up valuable collateral, which significantly reduces the lender's risk if repayment fails. How can someone increase their net worth? Growing your net worth is all about boosting your income, cutting down on unnecessary expenses, and consistently investing your savings into solid assets over time. What is a cash flow statement? A cash flow statement is a financial report that shows how money moves in and out of a business over a specific period, covering operations, investments, and financing. What is the difference between credit and debit? credit card lets you borrow money up to a certain limit to make purchases that you pay back later, while a debit card draws funds directly from your checking account. What is EBITDA? EBITDA stands for earnings before interest, taxes, depreciation, and amortization, giving a clear picture of a company's core profitability without accounting financing and accounting decisions. What is a call option? A call option gives you the right, but not the obligation, to buy a stock at a set price before a specific expiration date. What is inflation risk? Inflation risk happens when the purchasing power of your money declines over time, meaning your future returns might not buy as much as they do today. What are the risks of covered call ETFs? Covered call ETFs can limit your potential gains if the underlying stock skyrockets, and they still leave you vulnerable to market downturns since they do not fully protect against major losses. What is unemployment? Unemployment is simply the percentage of the labor force that is currently out of work and actively searching for a job. What is the policy rate? The policy rate is the benchmark interest rate set by a central bank to guide monetary policy and influence borrowing costs across the economy. What is drawdown? A drawdown measures the peak-to-trough drop in an investment's value before it recovers, showing just how much potential loss you might experience during a downturn. What is coast fire? Coast fire is a retirement strategy where you save enough early on so that your investments can grow on their own to cover your future expenses, without needing any additional contributions. What are the advantages of REITs? Real estate investment trusts let you own pieces of major properties like apartment complexes and malls without needing to buy actual buildings yourself. What is equal weight investing? Equal weight investing is an approach where you put the exact same dollar amount into every single company in a portfolio, rather than letting the biggest businesses dominate your holdings. What is a normal yield curve? A normal yield curve slopes upward, meaning bonds with longer maturity dates offer higher interest rates than short-term ones because investors take on more risk over time. What is a crypto exchange? A crypto exchange is a digital platform where people can buy, sell, and trade various digital currencies like Bitcoin and Ethereum using traditional money or other tokens. What is a business model? A business model is basically the master plan a company uses to make money and sustain itself, covering everything from what they sell to how they charge for it. What is a HELOC? A HELOC, or Home Equity Line of Credit, lets you borrow money using the equity you have built up in your home as collateral. What is a momentum stock? A momentum stock is a company whose share price has been rising steadily, and investors jump in hoping that upward trend will keep going for a while. Are dividends free money? Dividends are definitely not free money, since they are just a payout of a company's earnings that actually makes the share price drop by the exact same amount when they are paid out. What does financial freedom mean? Financial freedom means having enough passive income or savings to cover your living expenses, so you no longer have to rely on a traditional job. What is a money market fund? A money market fund is a very safe type of mutual fund that invests in short-term, low-risk debt to help keep your cash liquid and secure. How does a mortgage work? A mortgage is basically a specialized home loan you take out from a bank to purchase a property, and you pay it back gradually with interest over many years. What is volatility? Volatility measures how wildly and quickly an asset's price bounces around, giving us a good idea of its overall risk level. Why does the yield curve matter? The yield curve is super important because comparing short-term and long-term interest rates helps economists spot potential economic slowdowns or even recessions down the road. What is a cash-secured put? A cash-secured put is an option strategy where you sell a put contract while holding enough cash in your account to buy the underlying shares if the price drops below the strike price. What is delta? Delta is a helpful options metric that tells us roughly how much a contract's price will change when the underlying stock moves by $1. What is a long-term financial goal? A long-term financial goal is a major milestone you plan for years down the road, like buying a house or funding your retirement. What is gamma risk? Gamma measures how fast an option's delta changes when the stock price moves, which basically tells us how jumpy the risk level is getting. What is a checking account? A checking account is a handy bank account designed for your everyday spending and bills, making it super easy to deposit money and withdraw cash whenever you need it. Why is stagflation difficult for investors? Stagflation is tricky because you get stagnant economic growth combined with rising inflation, which usually hurts both stock and bond returns at the same time. What is a pension? A pension is a traditional retirement plan where an employer regularly sets aside funds to guarantee you a steady income stream after you finish your working years. What are the risks of covered call ETFs? Covered call ETFs are pretty neat for generating extra income, but they do carry the risk of capping your potential gains if the underlying stock skyrockets. Plus, they can still drop in value during a major market downturn, since you aren't fully shielded from those losses. Hey there, it is so wonderful to have you hanging out with us on the stream today. What fun topics are we diving into next? How does quantitative tightening affect markets? Quantitative tightening happens when a central bank reduces its balance sheet by selling assets or letting them mature, which generally pulls liquidity out of the financial system and can put downward pressure on asset prices. Hey there, so great to have you back in the chat with us today. What exciting financial topics should we tackle next? Should an emergency fund be invested? It is usually best to keep your emergency fund in a safe, liquid place like a high-yield savings account rather than investing it, so you can access the cash instantly without market risk when unexpected expenses pop up. What is quantitative tightening? Quantitative tightening occurs when a central bank actively reduces the money supply by letting bonds roll off its balance sheet or selling them outright, which typically tightens financial conditions. What is dividend payout ratio? The dividend payout ratio shows the percentage of a company's earnings that get paid out to shareholders as dividends, giving us a good look at how sustainable those payouts are. What is market cap weighting? Market cap weighting is an indexing method where companies make up a larger portion of the fund based on their total market value, meaning giant corporations carry the most weight. What is a valuation multiple? A valuation multiple is a financial metric that compares a company's stock price to a specific fundamental value, like earnings or sales, to help investors figure out if it is priced reasonably. What is ROE? ROE measures how much an options price is expected to change when interest rates shift by 1 percentage point. It is particularly important to keep an eye on for long-term options. What is fractional reserve banking? Fractional reserve banking is a system where banks are only required to hold a small percentage of their customer deposits in cash, allowing them to lend out the rest to support economic activity. What is a dividend ETF? A dividend ETF is an exchange-traded fund that specifically holds a basket of companies known for paying out regular dividends to their investors. It is a super popular way to build a steady income stream while keeping your portfolio diversified. many stocks should a portfolio hold? Having around 20 to 30 stocks is usually plenty to get solid diversification without making it too tough to keep track of everything. What is a bear market? A bear market happens when stock prices drop by 20% or more from their recent highs amid widespread pessimism and economic slowdowns. They are totally normal parts of the economic cycle, and markets always bounce back eventually. What is a money mindset? A money mindset refers to your overall attitudes and beliefs regarding wealth and spending, which really shape how you handle your finances every day. What is the labor force participation rate? The labor force participation rate measures the percentage of the working age population that is either currently working or actively looking for a job. It gives economists a really good look at how many people are participating in the active economy. How can investors simplify their portfolios? Investors can easily streamline their holdings by using broad market index funds, which bundle hundreds of companies into a single trade to provide instant diversification without the hassle of managing individual shares. What is delta hedging? Delta hedging is an options strategy where traders try to eliminate directional risk by offsetting positions so the overall portfolio value stays neutral if the stock price moves. What is an iron butterfly? An iron butterfly is an advanced options strategy that combines a put spread and a call spread with the same expiration date to profit when a stock stays within a narrow trading range. What is a buy now pay later service? Buy now pay later services let you split your purchases into smaller installments, usually without interest if you pay them off on time. What is a cap rate? Capitalization rate is the expected rate of return on a real estate investment property, calculated by dividing its net operating income by its current market value. What is a competitive moat? A competitive moat is a unique advantage that helps a business protect its market share and fend off rivals over the long run, just like a castle moat. Why do investors care about free cash flow? Free cash flow tells you how much actual cash a business has left over after paying its bills and funding operations, which shows its true financial health. How much money is enough to retire? Determining how much money you need for retirement usually depends on your projected yearly expenses, lifestyle goals, and how many years you expect to live post-career. Why do markets recover after crashes? Markets usually bounce back after a crash because strong businesses adapt. Investors step in to buy undervalued assets, and long-term economic growth eventually resumes. Why can a cheap stock stay cheap? An inexpensive share can stay low if the underlying business faces declining revenue, poor management, or weak industry trends that turn investors away. Price alone does not mean a company is a bargain. What are the risks of covered call ETFs? Covered call ETFs can cap your potential gains if the underlying stock skyrockets, and they still leave you exposed to market drops since you own the shares. Why do longer loans cost more? Longer loans generally cost more because lenders charge interest over a greater number of years, which significantly increases the total amount you pay back. What is financial leverage? Financial leverage is when a company uses borrowed money to fund its operations and investments, which can boost potential returns, but also increases your risk if things go south. What is a REIT? The REIT, or Real Estate Investment Trust, lets you invest in portfolios of large-scale properties like apartments and malls, without actually having to buy the physical buildings yourself. What is Services PMI? The Services Purchasing Managers Index measures the economic health of the service sector by surveying business executives about new orders, employment, and overall activity. What is contrarian investing? Contrarian investing is a strategy where you buy assets that are currently out of favor with the general public, betting that the market has overreacted to negative news. Why do companies go public? Companies usually decide to go public to raise significant capital for future growth, expansion, and paying off debts by selling shares to everyday investors on the open market. What is disinflation? Disinflation is simply a slowdown in the rate of inflation, meaning prices are still rising, but at a much slower pace than before. What causes inflation? Inflation typically happens when too much money chases too few goods, or when production costs rise and push prices higher across the board. How are ETF distributions generated? ETF distributions come from the dividends paid by the underlying stocks, or the interest earned from bonds held within the fund's portfolio. What is dividend coverage? Dividend coverage is a handy metric that shows how safely a company can pay its dividends using its earnings, usually calculated by dividing net income by the total dividends paid out. What is a credit limit? A credit limit is the absolute maximum amount of money a lender will let you charge to your credit card. How can someone increase their net worth? Growing your net worth is all about building up your assets while keeping your liabilities as low as possible. You can do this by consistently saving money, investing wisely, and steadily paying down your debts over time. What is thematic investing? Thematic investing is all about putting your money into specific trends or industries shaping the future, like artificial intelligence or clean energy, rather than focusing on just one single company. What are variable expenses? Variable expenses are costs that change from month to month, like your groceries, utility bills, or spending on entertainment, unlike fixed bills such as rent. What is net margin? Net margin is a profitability ratio that reveals how much net income a business generates as a percentage of its total revenue after all expenses are paid. What is automatic saving? Automatic saving is a handy feature you can set up with your bank to regularly transfer a specific amount of money straight from your checking account into your savings without you having to lift a finger. What is panic selling? Panic selling happens when investors get scared by a sudden market drop and quickly sell off their shares to prevent further losses, often locking in those exact losses before the market has a chance to recover. What is physical ETF replication? Physical ETF replication is when the fund actually buys all or a representative sample of the exact underlying securities in the index it tracks. What is return on invested capital? Return on invested capital is a super helpful ratio that measures how efficiently a company uses its money to generate profits from its investments. What is a credit limit? A credit limit is basically the maximum amount of money the credit card company will allow you to borrow at any given time. Why are retail sales important? Retail sales are a huge deal because they give us a clear picture of how much consumers are spending, which drives the overall economy. What is gross profit? Gross profit is simply the money a company makes after subtracting the direct costs associated with producing its goods or services. What is a capital gains distribution? A capital gains distribution is when a mutual fund or ETF pays out realized profits from selling its underlying assets to shareholders. Why is time in the market important? Staying invested over the long haul lets you take advantage of compound growth and ride out short-term market dips. What does PMI indicate? PMI stands for the purchasing managers. Why do people get trapped in minimum payments? Minimum payments trap people because they mostly cover the interest charges rather than chipping away at the actual debt, which causes balances to drag on for years. What is drawdown? A drawdown measures the peak-to-trough decline in the value of an investment or portfolio before it recovers to a new high. What is forward PE? Forward PE takes a company's current share price and divides it by its estimated future earnings per share for the coming year. It helps investors gauge how expensive a stock is based on projected growth rather than past performance. What are the risks of cryptocurrency? Crypto can be super volatile, meaning prices swing wildly up and down in very short time frames. Plus, there is less regulatory protection compared to traditional banking, so security is a huge factor. What is a distributing ETF? A distributing ETF is a fund that automatically pays out the dividends or interest earned from its holdings directly to your cash account instead of reinvesting them for you. What is forward PE? Forward PE looks at a company's stock price compared to its projected earnings for the upcoming year. It is a handy way to see if a stock is priced fairly based on where its profits are heading next. What makes a business profitable? A business becomes profitable when its total revenues from selling products or services exceed all the operational costs and expenses required to run it. What is sequence of returns risk? Sequence of returns risk is the danger of hitting a market downturn right as you start withdrawing money in retirement, which can drain your savings much faster than expected. What does PMI indicate? PMI, or private mortgage insurance, is an extra monthly fee lenders require if your down payment is less than 20%. It protects the lender if the loan defaults, but thankfully, it goes away once you build up enough equity. If you could invest $10,000 today, where would you put it? If I had $10,000 to invest right now, I would probably spread it across a broad market index fund for steady, long-term growth. It is an easy way to stay diversified without having to pick individual winning companies. Why does cash lose purchasing power? Cash loses its purchasing power over time because of inflation, which steadily drives up the prices of everyday goods and services. Basically, your money just doesn't stretch as far as it used to in the past. What is a bank run? A bank run happens when a massive wave of depositors suddenly rush to withdraw all their money at the same time because they fear the institution is about to fail. Since banks only keep a fraction of deposits in cash, it can quickly cause the whole system to collapse. How does issuing shares dilute investors? Issuing new shares increases the total number of pieces available, which means each existing owner now holds a slightly smaller percentage of the overall company. It is essentially slicing the same pie into more pieces, so each individual slice represents a smaller fraction of the whole. Why does dollar cost averaging work? Dollar cost averaging works because you automatically buy more shares when prices are low and fewer shares when prices are high. This clever approach helps lower your average cost per share over the long run without needing to time the market perfectly. What is sequence of returns risk? Sequence of returns risk is the danger of hitting a market downturn right when you begin taking withdrawals in retirement, which can drain your nest egg much faster. What is a dividend stock? A dividend stock is a share in a company that regularly pays out a portion of its profits directly to investors as cash. It is a fantastic way to earn a steady stream of passive income while you hold on to the investment. How does Bitcoin mining work? Bitcoin mining involves powerful computers solving complex mathematical puzzles to verify transactions and secure the network. And miners get rewarded with brand new crypto for their effort. Should investors own multiple overlapping ETFs? Owning multiple overlapping ETFs usually just means you are doubling up on the exact same underlying assets without adding any real diversification. It is usually much simpler to pick one strong fund that covers your main goals. What is physical ETF replication? Physical ETF replication means the fund manager actually buys the physical stocks or assets that make up the index instead of using derivatives. It is a straightforward way to track the market closely. How much money is enough to retire? Determining how much you need to retire depends entirely on your desired lifestyle, estimated yearly expenses, and how long you plan to live in retirement. Many experts suggest aiming to replace about 80% of your pre-retirement annual income to maintain a comfortable standard of living. Why does time horizon matter? Your time horizon matters because having a longer window lets you ride out short-term market dips and take advantage of potential growth. If you need the money sooner, you usually want to keep it in safer, more stable options so you don't risk losing it right before you spend it. What is pricing power? Pricing power is a company's ability to raise its product prices without losing customers to competitors, usually thanks to a strong brand or unique products. What does an investment bank do? An investment bank helps companies raise capital by underwriting new stocks and bonds, and they also guide businesses through major mergers and acquisitions. What is business confidence? Business confidence is basically a measure of how optimistic company leaders feel about the overall economy and their future earnings prospects. When managers feel positive, they tend to hire more staff and expand operations, which helps push the economy forward. What is a balance transfer? A balance transfer lets you move your high-interest credit card debt onto a new card that usually offers a 0% promotional interest rate for a set period. It is a helpful way to pay off what you owe faster without piling up so much extra interest. What is initial margin? Initial margin is simply the percentage of the purchase price you actually have to pay with your own cash when buying securities on credit. The rest is borrowed from your broker to help increase your potential buying power. What is a dividend ETF? A dividend ETF is a collection of stocks bundled together specifically to pay out regular cash distributions to investors. It is a neat way to earn steady income while still getting the diversification of a standard fund. What happens during a recovery? During an economic recovery, business activity starts picking up speed as consumer demand rises and production increases. Companies begin hiring again, which helps push employment and overall financial health back on track. What is an amortization schedule? An amortization schedule is a complete table showing every single loan payment, breaking down how much goes toward the principal and how much covers the interest over time. What is an emergency fund? An emergency fund is money you set aside specifically to cover unexpected costs like medical bills or sudden job loss, keeping you from going into debt. Why do companies go public? Companies usually decide to go public to raise a huge amount of capital so they can fund major expansions and new projects. It also lets early investors and founders finally cash out some of their shares for a profit. What is an effective tax rate? Your effective tax rate is the actual overall percentage of your total income that you pay in taxes, calculated after all deductions and brackets are applied. How can financial identity theft happen? Financial identity theft usually happens when fraudsters get hold of your sensitive personal information, like your social security number or account passwords. They can use these stolen details to open fraudulent credit cards or take out loans in your name. Why do expense ratios matter? Expense ratios tell you exactly how much of your fund's assets go toward annual management fees and operating costs. Choosing lower ratios means you get to keep more of your hard-earned investment returns over the long run. What is the first step to building financial stability? Starting your financial journey begins with creating a clear budget to track where your money goes every month. Once you have a handle on your cash flow, you can focus on building up savings and tackling any high-interest debt. What is volatility crash? Volatility crash happens when option prices drop sharply because a major event like an earnings report just passed, reducing the expected price swings for that asset. What is dealer gamma? Dealer gamma measures how fast an option market maker's hedging needs change as the underlying stock price moves around. It is a super important concept because high gamma can lead to really fast price swings. Why does dollar cost averaging work? Dollar cost averaging helps you buy more shares when prices are low and fewer when prices are high, which naturally lowers your average cost per share over time. What is a central bank? A central bank is the main monetary authority of a country, responsible for managing the money supply, setting interest rates, and regulating commercial banks to keep the financial system stable. What is time value? Time value basically means that a dollar you have right now is worth more than the exact same dollar in the future because of its potential earning capacity. When you factor in interest or investing, money today can grow over time, which is pretty neat. What is the producer price index? The producer price index tracks the average changes in prices that domestic producers receive for their output. It is a helpful economic indicator for spotting potential inflation trends early before they hit everyday consumers. What determines a property's value? A home's market value is mostly driven by its location, overall size, current condition, and what similar houses in the neighborhood have recently sold for. What is needs versus wants? Needs are the essential things required for basic survival, like healthy food, proper shelter, and healthcare, whereas wants are just fun extras that make life more enjoyable. What is bankruptcy? Bankruptcy is a legal process that helps individuals or businesses eliminate or repay their debts when they simply cannot pay them anymore. It gives people a chance for a fresh financial start, though it does stay on their credit report for a while. What is EBITDA? EBITDA stands for earnings before interest, taxes, depreciation, and amortization, which is a great metric to measure a company's overall financial performance without looking at financing or accounting decisions. What is private equity? Private equity is basically investment funds that buy up private companies or take public ones private to restructure them for big profits down the road. It is a super fascinating part of the financial world. What is a mortgage stress test? A mortgage stress test is a financial check lenders use to make sure you can still comfortably afford your loan payments if interest rates were to rise significantly in the future. Why are leveraged ETFs risky? Leveraged exchange-traded funds use financial derivatives and borrowed money to magnify returns, which can quickly multiply your losses just as fast if the market moves against you. What is leverage? Leverage is basically using borrowed money to increase your potential investment returns. It can boost your gains, but it definitely ramps up your risks too if things don't go as planned. What is momentum investing? Momentum investing is a strategy where people buy assets that have been showing strong recent upward price trends, hoping those gains will continue for a while longer. It is all about riding the wave of current market enthusiasm. What is a balance sheet? A balance sheet is a financial statement that gives a snapshot of a company's assets, liabilities, and shareholders' equity at a specific point in time. What are the risks of debt consolidation? Debt consolidation can sometimes lead to paying more in total interest if you stretch out the loan term over many years. Plus, if you do not address the underlying spending habits, you might end up running up those credit card balances all over again. How can you improve your credit score? You can boost your credit score by always paying your bills on time and keeping your credit card balances nice and low. Making these little habits a priority really adds up over time. What is a distributing ETF? A distributing ETF is a fund that automatically pays out the dividends or interest earned from its underlying investments directly to your cash account, instead of reinvesting them back into the fund. Why would a company perform a reverse split? A company usually does a reverse stock split to increase its per share price, often to meet minimum exchange listing requirements or to look more appealing to institutional investors. What is a record date? A record date is simply the cutoff day a company uses to figure out which shareholders are officially eligible to receive an upcoming dividend payment. What is a stock exchange? A stock exchange is an organized marketplace where buyers and sellers come together to trade shares of publicly held companies. What is a hostile takeover? A hostile takeover happens when an outside group buys up enough shares to take control of a company against the wishes of its current board and management. What is diversification? Diversification is simply spreading your investments across different asset types and industries so that if one performs poorly, the others can help cushion the impact. What is growth investing? Growth investing is all about targeting companies that are expected to expand their revenues and earnings at an above-average pace compared to the rest of the market. Why do people overspend? People often overspend because of emotional triggers, convenience with digital payments, or simply losing track of daily impulse buys without a clear plan. What does gamma measure? Gamma measures how fast a stock's option delta changes when the underlying share price moves, helping traders understand the stability of their risk. Is diversification overrated? Not at all. Diversification is one of the best ways to protect your portfolio from unexpected market drops by spreading your risk around. How long do bear markets usually last? Bear markets can vary quite a bit, but historically they tend to last anywhere from several months to a little over a year on average. How can you measure ETF diversification? You can measure ETF diversification by looking at its underlying holdings, checking how heavily weighted the top few stocks are, and reviewing the mix of different market sectors included in the fund. What is defensive investing? Defensive investing focuses on buying shares of stable companies that tend to perform well no matter what the broader economy is doing, like utilities or consumer staples. Why would someone buy a put? Buying a put option gives you the right to sell a stock at a set price, which acts like insurance to protect your portfolio if the market drops. How does a GIC work? A guaranteed investment certificate is a secure savings product where you lock in your money for a set term at a fixed interest rate, and you get your original deposit back plus your earned interest when it matures. Is a concentrated portfolio better for wealthy investors? Concentrated portfolios hold fewer stocks, which can lead to higher potential returns, but they also come with a lot more risk if one of those companies struggles. What does a high PE mean? A high price-to-earnings ratio typically suggests that investors expect strong future profit growth from the company, though it can also mean the stock is currently expensive. Are buy now pay later plans risky? Buy now pay later plans can definitely lead to overspending if you are not careful, since they make it super easy to rack up multiple purchases without feeling the immediate financial impact. What is tax-deferred investing? Tax-deferred investing lets you put money into accounts like a traditional IRA, where you do not pay taxes on your contributions or gains until you actually withdraw the funds in retirement. What is forward guidance? Forward guidance refers to the official communications from a central bank regarding the future direction of monetary policy, which helps markets anticipate interest rate changes. What is the opportunity cost of saving cash? The opportunity cost of holding cash is the potential growth or investment returns you miss out on by not putting that money to work in the market. What is net operating income? Net operating income is the total revenue a real estate property generates minus its necessary operating expenses, giving you a clear picture of its profitability before taxes and mortgage payments. What is delinquency? Delinquency happens when a borrower misses a required loan or credit card payment past its due date, which can negatively impact their credit score. What is inflation risk? Inflation risk is the danger that the purchasing power of your money will decrease over time as the prices of goods and services go up, which can hurt your returns if your investments do not grow fast enough. Should investors own multiple overlapping ETFs? Owning multiple overlapping ETFs usually just means you are doubling up on the exact same underlying assets rather than truly diversifying. It is usually much simpler to pick one solid fund that covers your target index and stick with it. What is needs versus wants? Needs are essential items like food and housing that you must have to survive, while wants are nice to have extras like luxury gadgets or dining out. What is cash flow from real estate? Real estate cash flow is basically the leftover money you pocket each month after collecting rent and paying off all your property expenses and mortgage. It is a super handy way to see if your investment property is actually making a profit. What is private equity? Private equity involves investing directly in private companies or buying public ones to take them private, usually to restructure and boost their value before selling later. How does deflation affect investments? Deflation is when overall price levels drop, which can actually increase the real value of your cash, but it often hurts corporate profits and slows down economic growth overall. How does dividend reinvestment create compounding? Dividend reinvestment uses your payouts to automatically purchase more shares without extra effort, which means those new shares start earning their own dividends too and supercharge your long-term growth. is a leveraged ETF? A leveraged ETF uses financial derivatives and debt to amplify the daily returns of an index, which can heavily boost gains or accelerate losses in a volatile market. What is a bank's net interest margin? Net interest margin is basically the difference between the interest a bank earns on loans and the interest it pays out to depositors, showing how well it makes a profit from lending. What are the risks of cryptocurrency? Crypto can be super wild because prices swing up and down drastically in very short time frames. Plus, there are security threats like hacking or losing your digital keys. What is a cash flow statement? A cash flow statement gives you a clear picture of how money moves in and out of a business by breaking things down into operating, investing, and financing activities. Should investors hold cash during a market crash? Holding some cash during a major market downturn can be really helpful because it gives you the flexibility to buy up great assets at a discount without needing to sell anything else at a loss. What is revolving credit? Revolving credit is a flexible loan arrangement, like a credit card, where you can borrow up to a certain limit, pay it back, and then borrow again whenever you need. What is the bid-ask spread in options? The bid-ask spread is simply the gap between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept for an option contract. What is passive investing? Passive investing is a strategy where you buy a broad market index fund and hold on to it for the long term instead of constantly trading, which helps keep your fees low and reduces stress. What is a good net worth for your age? Net worth varies a lot depending on your career stage and background. But a common rule of thumb is multiplying your age by your annual salary and dividing by 10. What is a home equity loan? A home equity loan lets you borrow money using the portion of your property's value that you've already paid off as collateral, usually giving you a lump sum with a fixed interest rate. What is sequence of returns risk? Sequence of returns risk is the danger of facing a market downturn right when you start withdrawing from your retirement accounts, which can deplete your savings much faster. What is dilution? Dilution happens when a company issues new shares of stock, which reduces the ownership percentage of existing shareholders. What is the maximum loss on a short position? When you take a short position, your potential loss is technically unlimited because a stock's price can keep rising indefinitely. What is longevity risk? Longevity risk is simply the chance that you might outlive your financial savings during retirement, which is why planning ahead is so important. Why should investors take advantage of an employer match? An employer match is essentially free money added straight to your retirement account, so skipping it means leaving part of your compensation on the table. Always try to contribute at least enough to grab the full match. What is one financial rule everyone should know? One classic rule is the 50-30-20 guideline, which suggests putting half your income toward needs, 30% for wants, and 20% into savings. What is the debt avalanche method? The debt avalanche method is a payoff strategy where you tackle the account with the highest interest rate first while making minimum payments on the rest, which saves you the most money over time. What is an iron butterfly? An iron butterfly is an advanced options trading strategy that combines a put spread and a call spread to profit when a stock stays within a very narrow price range. What investments can hedge against inflation? Assets like real estate, commodities such as gold, and treasury inflation-protected securities are classic choices because their values often rise right along with the cost of living. How can you improve your debt-to-income ratio? You can boost that ratio by either paying down your existing balances or finding ways to increase your monthly income. What is a mega cap company? Mega cap companies are massive publicly traded corporations with market values usually exceeding $200 billion, like tech giants and global retail brands. What is alpha? In investing, alpha basically measures how well a portfolio performs compared to a benchmark index. So a positive alpha means it beat the market average. What are operating expenses? Operating expenses are the day-to-day costs a company pays to keep its business running, like rent, utilities, and office supplies. What is business confidence? Business confidence measures how optimistic company leaders are about the overall economy and their future earnings, which usually drives them to hire and invest more. What is a market order? A market order is a type of instruction you give to buy or sell a security immediately at the best available current price. Should high-interest debt be paid before investing? Focusing on wiping out high-interest debt first is usually the smartest move, since those interest charges can pile up quickly and outpace typical investment returns. What is leverage in real estate? Real estate leverage simply means using borrowed money, like a mortgage, to buy a property so you can control a much bigger asset with a smaller amount of your own cash. How does issuing shares dilute investors? When a company creates and sells new shares, your individual ownership percentage shrinks because the total pie is now divided among a larger group of people. What expenses qualify as emergencies? Emergency expenses are unexpected costs you really can't avoid, like urgent medical bills, major car repairs, or sudden home plumbing leaks. Why is deposit insurance important? Deposit insurance is super important because it keeps your money safe in the bank even if the institution runs into trouble, giving you total peace of mind. What is an inverted yield curve? An inverted yield curve happens when short-term bonds pay higher interest rates than long-term ones, which historically has been a reliable warning sign for an upcoming recession. What is a TFSA? A TFSA is a tax-free savings account that lets your investments grow and withdraw without paying any taxes on the earnings. Does closing a credit card hurt your credit? Closing a credit card can actually hurt your credit score by lowering your overall available credit limit and shortening your average credit history length. How does bankruptcy affect credit? Filing for bankruptcy stays on your credit report for up to 10 years, which makes qualifying for new loans or credit cards much tougher for a while. What is the federal funds rate? The federal funds rate is the benchmark interest rate that commercial banks charge each other for overnight loans, which heavily influences all kinds of consumer borrowing costs. Why are penny stocks risky? Penny stocks are super risky because they trade for very little money, have low trading volume, and often belong to tiny companies that can easily go out of business. Why does theta matter? Theta measures how much an option's price decreases each day as it gets closer to its expiration date, which is super important for option sellers who want time decay to work in their favor. What is a mortgage renewal? A mortgage renewal is simply when your current term ends and you sign a new agreement with your lender to keep borrowing the remaining balance, usually with updated interest rates. Why is liquidity important? Liquidity matters because it means you can quickly turn your assets into cash without losing value when you need money in a hurry. How do you calculate savings rate? Your savings rate is simply the percentage of your total income that you manage to set aside rather than spend each month. You can easily figure it out by dividing your total monthly savings by your net income and multiplying by 100. Why would someone buy a put? Purchasing a put option gives you the right to sell a stock at a set price, which acts like insurance if you expect the market to drop. What is the debt avalanche method? The debt avalanche method is a payoff strategy where you put all your extra money toward the balance with the highest interest rate first, which saves you the most cash overall. What is wage inflation? Wage inflation happens when workers' pay increases across the board, which can sometimes push businesses to raise their prices to keep up with higher labor costs. Why does Bitcoin have a limited supply? Bitcoin has a hard cap of 21 million coins encoded right into its software, which creates artificial scarcity just like precious metals. What is sector rotation? Sector rotation is an investment strategy where folks shift their money between different industry groups to take advantage of where the business cycle is heading next. What is option premium? An option premium is the upfront cost you pay to buy an option contract, which represents the total market value of that specific right. What is a unicorn company? A unicorn company is a privately held startup valued at over $1 billion, which is pretty rare to find in the business world. What is a centralized exchange? A centralized exchange is a platform managed by a single company that helps people buy and sell digital assets, kind of like a traditional stock market. What are the stages of a market cycle? A market cycle typically moves through four main phases: accumulation, markup, distribution, and markdown. These stages reflect the shifting sentiment of investors as economic conditions evolve over time. Why does the yield curve matter? The yield curve is super important because it compares short-term and long-term interest rates, which helps economists and investors gauge the health of the economy and spot potential recessions ahead of time. What does Vega measure? Vega measures how much an option's price is expected to change when there's a shift in the overall market volatility. It's a handy metric for seeing how much implied volatility can impact your trades. How does a closed-end fund differ from an ETF? A closed-end fund issues a fixed number of shares all at once through an initial public offering, whereas an ETF can create or redeem shares continually to match market demand. What is overtrading? Overtrading happens when an investor buys and sells securities way too often, usually racking up heavy fees and taking on way more risk than they planned. What is the opportunity cost of saving cash? The opportunity cost of keeping your money in cash is missing out on potential investment returns or interest you could have earned if that money was put to work elsewhere. What is an at-the-money option? An at-the-money option is a contract where the strike price is right in line with the current market price of the underlying asset. What is crowdfunding? Crowdfunding is a way for creators or businesses to raise money from a large group of people online, usually by collecting small contributions from lots of supporters. What is sector rotation? Sector rotation is a strategy where investors move their money from one industry sector to another depending on where we are in the economic cycle. What are refinancing costs? Refinancing costs are the fees you pay to replace your current loan with a new one, which usually include things like application fees, appraisal costs, and closing fees. What is a cash flow statement? A cash flow statement gives us a clear look at how money moves in and out of a business over a specific period. It tracks operating, investing, and financing activities so we can see the true financial health of the company. Why are retail sales important? Retail sales give us a really good look at how much consumers are spending, which tells us a lot about the overall strength of the economy. How does supply affect prices? When supply goes up and demand stays the same, prices usually drop because there is plenty to go around. On the flip side, if supply is low and everyone wants it, prices tend to shoot right up. What happens during an economic expansion? During an economic expansion, businesses grow, jobs become more plentiful, and overall consumer spending increases significantly as the market thrives. What is an emerging markets ETF? An emerging markets ETF is an exchange-traded fund that invests in companies located in developing economies, which gives us a great way to tap into rapid growth potential overseas. Why do longer loans cost more? Longer loans generally end up costing more because you are paying interest over a much longer period of time. Even if the monthly payment is lower, that extra time adds up to a lot more total interest paid. Why does implied volatility rise before earnings? Implied volatility tends to spike before an earnings report because investors are bracing for a massive price swing once the actual numbers drop. Uncertainty always drives up option prices as everyone tries to hedge their bets. How does an ETF work? An exchange-traded fund pools money from many investors to buy a whole basket of assets, like stocks or bonds, which trades just like a single share on the stock market. What is a private key? A private key acts like a super secure password for your cryptocurrency wallet that proves you own your digital assets. What is a decentralized exchange? A decentralized exchange lets people trade digital assets directly with each other without needing any middleman or central authority. What is proof of work? Proof of work is a security mechanism used by blockchains where computers have to solve complex math puzzles to verify transactions and add new blocks. What is the Consumer Price Index? The Consumer Price Index measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. What is option premium? An option premium is simply the total cost you pay to purchase an option contract, which is made up of its intrinsic value and time value. What is the biggest budgeting mistake people make? The most common trap is forgetting to track small daily purchases that quietly drain your cash over time. Setting up a realistic spending plan helps catch those little leaks before they add up. What is a credit bureau? A credit bureau is an agency that collects your financial history and payment habits to create a credit report for lenders. How long can negative credit information remain? Negative credit info generally stays on your report for about 7 years, though bankruptcies can linger for up to 10. What is a high savings rate? A high savings rate simply means you are putting aside a large percentage of your take-home pay instead of spending it all. Why are retail sales important? Retail sales data gives us a really good look at how confident consumers are and how much they are spending, which drives a huge part of our overall economy. What is a variable rate mortgage? A variable rate mortgage is a home loan where the interest rate can change periodically based on overall market conditions, meaning your monthly payments might go up or down over time. What is synthetic ETF exposure? Synthetic ETF exposure means the fund uses swap agreements with financial institutions to track an index rather than physically holding the underlying stocks, which can introduce some counterparty risk. What is a variable rate mortgage? A variable rate mortgage features an interest rate that adjusts periodically alongside market trends, meaning your monthly housing payment can fluctuate over time. Can you be too diversified? It is definitely possible to over-diversify, which happens when you own so many different assets that your portfolio's overall returns just end up tracking the entire market while diluting any meaningful gains. Why do central banks lower interest rates? Central banks cut interest rates to make borrowing cheaper, which encourages businesses and consumers to spend and invest more to stimulate a slowing economy. How do banks make money? Banks primarily make money by charging a higher interest rate on the loans they give out than the interest they pay to people keeping their cash in savings accounts. Why do traders lose money? Traders often take losses because letting emotions like fear or greed take over leads to impulsive decisions instead of sticking to a solid plan. How are stock market indexes created? Stock market indexes are created by selecting a specific group of companies that represent a particular market or sector, and then weighting them by either their market capitalization or stock price. What is a bond ETF? A bond ETF is a fund that trades on an exchange and holds a basket of fixed income securities, giving you steady interest payments without needing to buy individual bonds yourself. How can you negotiate a lower interest rate? You can usually score a lower interest rate by shopping around with different lenders to compare offers and by boosting your credit score before applying. What is a soft credit inquiry? A soft credit inquiry is simply a check on your credit report that doesn't impact your credit score at all, usually happening when you check your own score or when a lender pre-approves you for an offer. What is bankruptcy? Bankruptcy is a legal process that helps individuals or businesses eliminate or restructure their overwhelming debts when they simply cannot pay them back anymore. What is deflation? Deflation happens when the overall prices for goods and services drop across the economy, which can increase your purchasing power, but usually signals a slowing economy. What is a bank loan? A bank loan is a sum of money you borrow from a financial institution that you agree to pay back over time with added interest. What is a stable coin? A stablecoin is a type of digital currency designed to keep its value pegged to another asset, like the US dollar, to avoid wild price swings. What is a 60/40 portfolio? A 60/40 portfolio is an investment strategy split between 60% stocks for growth and 40% bonds for stability. It is a classic way to balance risk while aiming for steady returns over time. What is standard deviation? Standard deviation measures how much a set of investment returns bounces around compared to its average, giving us a clear picture of market volatility. How does fear affect markets? Fear can cause sudden sell-offs as panic sets in, often driving stock prices down even when the underlying businesses are still doing just fine. What is a retirement account? A retirement account is a special savings plan designed specifically to help you tuck away funds for your later years, while often giving you sweet tax perks. What is tail risk? Tail risk refers to those rare and extreme market events that lie way out on the bell curve, meaning they are super unlikely to happen, but pack a massive punch if they do. Why do investors sell covered calls? Investors sell covered calls to generate some extra income from the shares they already own, while hoping the stock price stays relatively stable. What is blockchain technology? Blockchain is like a shared digital ledger that securely records transactions across a whole network of computers, so nobody can tamper with it. Are buy now pay later plans risky? Buy now pay later plans let you split purchases into smaller chunks, but they can easily tempt you into spending more than you planned and sometimes carry sneaky fees if you miss a payment. What is delayed gratification? Delayed gratification is all about passing up a smaller reward right now, so you can wait and score something way better down the road, which is super helpful for hitting those big financial goals. What is a bear put spread? A bear put spread involves buying a put option at a higher strike price and selling another put option at a lower strike price to profit if the market dips. What is economic expansion? Economic expansion is a phase of the business cycle where the economy grows, leading to increased employment, higher incomes, and more business activity. What is EBIT? EBIT stands for earnings before interest and taxes, which gives us a clear look at a company's profitability from its core operations without those extra financial burdens. Why would someone buy a put? Buying a put option gives you the right to sell a stock at a set price, which acts like insurance to protect your portfolio if the market takes a sudden dive. What is short interest? Short interest tells us the total number of shares that investors have borrowed and sold short, but haven't bought back yet, which gives us a good clue about how many people expect a stock's price to drop. Why do central banks raise interest rates? Central banks increase interest rates primarily to slow down inflation and cool off an overheating economy by making borrowing more expensive. How quickly can someone build an emergency fund? Building an emergency fund really depends on how much you can comfortably save each month. But aiming to set aside a little bit from every paycheck is a fantastic way to reach that goal steadily. What is a market crash? A market crash happens when stock prices drop suddenly and sharply across the board, usually triggered by panic selling or major economic trouble. What happens after missed payments? Missing a payment usually leads to late fees, potential dings on your credit score, and sometimes higher interest rates kick in if you fall too far behind. What is ROE? ROE measures how much an option's price changes when interest rates move up or down by 1%. It is super handy to keep an eye on when looking at long-term options. Why should investors avoid emotional decisions? Making choices based on feelings rather than logic often leads to buying high out of excitement and selling low out of panic. Keeping a level head helps us stick to our long-term plan. How do investors value a company? Investors typically look at a company's financial health, future growth potential, and earnings reports to figure out its true worth. Comparing it with similar businesses in the same industry is also super helpful. How do banks make money? Banks primarily earn revenue by charging higher interest rates on loans they give out than the interest they pay to people keeping money in savings accounts. They also make a good amount from various account fees and financial services. What is enterprise value? Enterprise value looks at a company's total worth by taking its market cap, adding total debt, and subtracting any cash on hand. It gives a much clearer picture of what the business is actually valued at if someone wanted to buy it out completely. Why is total return important? Total return matters because it gives you the complete picture of your investment's performance by combining any cash dividends received with overall price growth. It really helps you see how hard your money is actually working for you over time. What is the biggest investing mistake? The biggest stumble people usually make is trying to time the market instead of focusing on consistency. Sticking to a steady plan helps us avoid those costly emotional traps. What is buying power? Buying power is basically the total cash and available margin you have ready in your brokerage account to purchase new investments right away. How are stock market indexes created? Stock market indexes are built by grouping specific groups of companies together, like the biggest firms in tech or retail. They use special math formulas based on market size or share prices to track how that whole group is performing. What is a yield curve inversion? A yield curve inversion happens when short-term bonds pay higher interest than long-term ones, which historically has been a reliable warning sign for an upcoming recession. What is maintenance margin? Maintenance margin is the minimum amount of equity you need to keep in your brokerage account after buying securities on margin. If your account value drops below that threshold, your broker will issue a margin call asking you to deposit more funds. How do REITs make money? Real estate investment trusts generally generate income by collecting rent from tenants across their large portfolio of properties. They also earn cash by buying and selling real estate assets for a profit. What is unsecured debt? Unsecured debt is a loan that doesn't require any collateral, meaning the lender doesn't have a claim on your specific property if you miss payments. What is an apartment REIT? An apartment REIT is a specific type of real estate investment trust that focuses mainly on owning and managing multifamily residential buildings. They make money primarily by collecting monthly rent from all their tenants. What is lump sum investing? Lump sum investing means putting all of your money into the market at once rather than splitting it up over time. It can give your investments a longer runway to potentially grow. How is a credit score calculated? Your credit score is calculated using factors like payment history, how much debt you currently owe, and how long your credit accounts have been open. Lenders look at this mix to figure out how reliably you manage borrowed money. What are the risks of cryptocurrency? Cryptocurrency can be super volatile, meaning prices swing wildly up and down in a flash. Plus, there are cybersecurity risks like hacks and scams, since most digital currencies aren't backed by a government. What is loan default? Loan default happens when a borrower fails to make their required payments on a debt over a certain period, which can seriously damage their credit score. What is a 0 days to expiration option? A 0 days to expiration option is a contract that expires on the exact same trading day you buy it. They have become super popular because they offer fast-paced trading opportunities, but they also carry massive risk due to how quickly they can lose value. What is a short-term financial goal? A short-term financial goal is a target you plan to achieve soon, usually within a year, like saving up for a fun vacation or building a starter emergency fund. Can investors consistently time the market? Trying to time the market consistently is nearly impossible because nobody can reliably predict short-term price movements. Most experts suggest sticking to a long-term plan instead. What is a productivity recession? A productivity recession happens when economic output drops relative to the hours worked, meaning businesses are getting less efficiency out of their workforce. What is a dividend aristocrat? A dividend aristocrat is a company that has increased its dividend payouts for at least 25 consecutive years. These firms are usually super reliable and financially stable. When does refinancing make sense? Refinancing usually makes the most sense when interest rates have dropped significantly since you got your original loan, which can lower your monthly payments. It is also a smart move if you want to switch from an adjustable rate to a fixed-rate mortgage for more financial stability. Should high-interest debt be paid before investing? Knocking out high-interest debt first is usually the smartest move, because those interest rates are typically way higher than what you could reliably earn in the market. Is investing early more important than investing more? Starting early gives your money much more time to compound, which is usually considered more impactful than just dropping a large lump sum in later. How does greed affect markets? Greed can cause investors to chase hot trends and drive asset prices up to unsustainable levels, often creating a massive bubble that eventually bursts. What is a commodity ETF? A commodity ETF is a fund that tracks the performance of physical goods like gold, oil, or agricultural products, letting you trade them easily without actually having to store barrels of crude oil in your garage. What is predatory lending? Predatory lending involves lenders using unfair, deceptive, or fraudulent practices to trick borrowers into taking out loans with extremely high interest rates and hidden fees. How much cash is too much cash? Holding too much cash can actually hurt your purchasing power over time, because inflation quietly eats away at its value. It is usually best to keep an emergency fund and invest the rest so it can grow. What causes a bank run? A A bank run happens when a huge wave of depositors suddenly rush to withdraw their money all at once because they are worried the bank is about to run out of cash. Since banks keep only a small fraction of deposits on hand, this panic can actually cause the institution to collapse. What is tax efficiency? Tax efficiency is all about structuring your investments to minimize the amount of taxes you owe, letting you keep a much bigger chunk of your returns. What percentage of income should you save? Aiming to save about 20% of your income is a fantastic baseline to shoot for. It helps build a solid cushion for the future while still letting you enjoy life today. Why should investors take advantage of an employer match? An employer match is basically free money added straight to your retirement account. Leaving it on the table means missing out on a huge boost to your savings. What is the S&P 500? The S&P 500 is a major stock market index tracking the 500 largest publicly traded companies in the United States, giving us a great snapshot of how the overall economy is doing. What is the ask price for an option? The ask price is the lowest dollar amount a seller is willing to accept for an option contract. When you are looking to buy an option, this is the rate you will need to pay to make the trade happen. What is working capital? Working capital is simply the money a company has available for its daily operations, calculated by taking current assets minus current liabilities. What is dividend capture? Dividend capture is a short-term trading strategy where someone buys a stock right before its payout date to collect the dividend, and then quickly sells it afterward. What causes deflation? Deflation happens when the overall prices for goods and services drop across the economy, usually driven by a sharp drop in consumer demand or a major leap in production efficiency. What is accounts receivable? Accounts receivable represents the money that customers owe a business for products or services they have already delivered on credit. What is price to sales? The price to sales ratio compares a company's total market value to its yearly revenue, helping investors figure out whether a stock is priced reasonably relative to how much money it brings in. What causes ETF overlap? ETF overlap happens when two or more exchange-traded funds hold some of the exact same underlying securities or companies in their portfolios. What are non-durable goods? Non-durable goods are everyday items that get used up quickly or last for less than 3 years, like food and clothes. How are ETF distributions generated? ETF distributions come from the dividends paid by the underlying stocks, or the interest earned on bonds held inside the fund portfolio. What is a sinking fund? A sinking fund is a type of savings plan where you set aside money regularly to pay for a specific expense or debt in the future, like a mortgage or a car loan. What is an in-the-money option? An in-the-money option is a contract that actually has intrinsic value, meaning a call option has a strike price below the current stock price, or a put option has one above it. What is the Russell 2000? The Russell 2000 is an index that tracks the performance of approximately 2,000 small-cap companies in the U.S. stock market, providing a benchmark for small-cap stocks. What happens during an economic expansion? During an economic expansion, businesses grow, job opportunities increase, and consumer spending rises as the overall economy thrives. Why does implied volatility rise before earnings? Implied volatility tends to increase before earnings announcements because investors are uncertain about the company's future performance, leading to a wider range of possible stock price movements. What is a dividend? A dividend is a portion of a company's profit that is distributed to its shareholders, usually on a regular basis, as a way to reward investors for their loyalty and investment. What is a defined benefit pension? A defined benefit pension is a type of retirement plan where an employer promises to pay a certain amount of money to an employee after they retire, based on their salary and years of service. What is a defined benefit pension? That's super interesting. Tell me more about it. What is a crypto bull market? A crypto bull market refers to a prolonged period of time when the cryptocurrency market is experiencing significant growth, with prices rising and investor confidence increasing, often driven by factors like technological advancements, increased adoption, and positive regulatory developments. What is a normal yield curve? A normal yield curve slopes upward, meaning that bonds with longer maturity dates offer higher interest rates than short-term ones because investors take on more risk over time. Is passive investing better than active investing? Passive investing often involves a long-term approach with a buy-and-hold strategy, whereas active investing requires more frequent buying and selling to try to beat the market. So it really depends on your personal financial goals and risk tolerance. What is deposit insurance? Deposit insurance is a government protection program that safeguards the money you keep in bank accounts, usually up to a specific limit, even if the financial institution happens to fail. What is deposit insurance? Deposit insurance is basically a safety net, backed by the government, that keeps your hard-earned cash safe in insured banks up to a certain limit if anything goes wrong. What is financial risk? Financial risk refers to the possibility of losing money or experiencing a negative impact on your financial situation, often due to unforeseen events or poor investment decisions. Why does the yield curve matter? The yield curve is important because it can indicate the overall health of the economy and help investors make informed decisions about their investments, as it reflects the relationship between interest rates and bond maturity periods. Where should an emergency fund be stored? An emergency fund should be stored in a liquid, low-risk savings account, such as a high-yield savings account or a money market fund, that is easily accessible when needed. What is option premium? An option premium is the price paid for an options contract, which gives the buyer the right, but not the obligation, to buy or sell an underlying asset at a specified price before a certain date. What is inflation risk? Inflation risk refers to the possibility that rising prices will erode the purchasing power of your money over time, which can be a concern for investors and savers alike. Why are leveraged ETFs risky? Leveraged ETFs are considered risky because they use debt to amplify their returns, which can lead to significant losses if the market moves against them, and their value can also decay over time due to compounding effects. What is a Roth IRA? A Roth IRA is a special retirement account where you put in money you have already paid taxes on, so your investments can grow and be withdrawn completely tax-free later in life. What is GDP? GDP, or gross domestic product, is a measure of the total value of goods and services produced within a country's borders over a specific time period, usually a year, which helps track the overall health and growth of an economy. What is an M&A deal? That's a great question. What are your thoughts on it? What is a high-interest savings account? A high-interest savings account is a type of savings account that earns a higher interest rate compared to a traditional savings account, allowing you to grow your money over time while still having easy access to your funds. What is a bear market? A bear market happens when stock prices drop significantly by 20% or more from recent highs due to widespread pessimism. It is a completely normal part of the economic cycle, even though it can feel a bit nerve-wracking to watch. What is a personal loan? A personal loan is a type of loan that you can use for just about anything, like paying off debt, covering unexpected expenses, or even financing a big purchase, and you typically repay it in fixed monthly payments over a set period of time. What is quality investing? Quality investing is a strategy where you focus on purchasing shares of financially stable companies that have strong balance sheets and consistent earnings. What is industrial production? Industrial production refers to the total output of a country's factories, mines, and utilities over a specific period of time, which can be an important indicator of economic growth and overall activity. What is return on assets? Return on assets, or ROA, is a financial metric that shows how well a company is using its assets to generate profits, giving you an idea of its overall efficiency and performance. What is a put option? A put option is a type of financial contract that gives the buyer the right, but not the obligation, to sell a specific asset at a predetermined price before a certain date, which can help protect against potential losses if the market moves downward. Can a great company be a bad investment? Even a great company can be a bad investment if its stock price is overvalued, or if the company's future prospects don't align with your investment goals. What is rental yield? Rental yield is the annual return on investment that a property generates through rental income, typically expressed as a percentage of the property's value, giving you an idea of its potential for generating passive income. What is a bank run? A bank run occurs when a large number of customers withdraw their money from a bank at the same time, often due to concerns about the bank's stability or solvency, which can potentially lead to the bank's collapse. What is a high-interest savings account? A high-interest savings account is a special type of savings account that earns a higher interest rate compared to a traditional savings account, allowing your money to grow over time while still having easy access to your funds. What is predatory lending? Predatory lending refers to unfair or deceptive practices by lenders that take advantage of borrowers, often with high interest rates or hidden fees, which can lead to financial difficulties for the borrower. What is margin trading? Margin trading is a way of using borrowed money from a broker to buy more stocks, which can amplify potential gains, but also increases the risk of bigger losses if the market moves against you. is a cash flow statement? That's a great question. What are your thoughts on it? What is investing? Investing is putting your money into something with the hope that it will grow in value over time, such as stocks, real estate, or other assets, to achieve your long-term financial goals. Why do banks pay interest on deposits? Banks pay interest on deposits as a way to thank customers for keeping their money in the bank, and it also helps to encourage people to save their money rather than spending it right away. What is a defined benefit pension? A defined benefit pension is a type of retirement plan where an employer promises to pay a certain amount of money to an employee after they retire, based on their salary and years of service. Is having multiple credit cards beneficial? Having multiple credit cards can be beneficial if you're able to manage them responsibly, as it can help you earn more rewards and improve your credit score by showing lenders you can handle multiple lines of credit. What is an out-of-the-money option? An out-of-the-money option is a type of option contract where the strike price is unfavorable compared to the current market price, meaning the option has no intrinsic value and only retains time value. What is an ETF? An ETF, or exchange-traded fund, is a type of investment that combines the benefits of individual stocks and mutual funds, allowing you to diversify your portfolio by investing in a broad range of assets with a single fund. Why do companies issue shares? Companies issue shares to raise capital for various purposes, such as expanding their business, paying off debts, or financing new projects by selling ownership in their company to investors. What is proof of stake? That's a great question. What are your thoughts on it? What happens during a recession? During a recession, the economy slows down, and there's often a decline in spending, production, and employment, which can impact businesses and investments. Is it better to pay debt or invest? It's generally a good idea to pay off high-interest debt first, as it can save you money in interest payments over time, and then consider investing for long-term growth. Does closing a credit card hurt your credit? Here is the JSON requested. JSON. What is equal weight investing? Equal weight investing is an investment strategy where each stock in a portfolio is given the same weight or importance, regardless of its market capitalization, to potentially reduce risk and increase diversification. What is a centralized exchange? A centralized exchange is a platform where buyers and sellers trade assets, like stocks or cryptocurrencies, through an intermediary that facilitates the transactions and holds the assets, providing a level of security and regulation. What is a home equity? A home equity is essentially the value of ownership in a home, calculated by subtracting the amount still owed on the mortgage from the current market value of the property. What is a money market fund? A money market fund is a kind of mutual fund that invests in very safe, short-term debt instruments, which helps keep your cash secure while still earning a little bit of interest. What happens during a recession? During a recession, economic activity slows down, leading to reduced consumer spending, lower production levels, and higher unemployment rates, which can have a significant impact on businesses, investments, and overall financial stability. What is a stock split? A stock split is when a company divides its existing shares into a larger number of shares, usually to make the stock more affordable for investors and increase liquidity.